right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Guys, we are continuing to explode on Bitcoin, but we are coming up into some very, very key resistance. Remember how powerful anchored VWAPs are. This could determine whether the bear market low is in or not. In my opinion, if we flip market structure bullishly, and if we break above the anchored VWAP, flip it to support and continue higher, that would allow a bullish break in weekly market structure, and it would allow the start from the macro low with an impulsive move to the upside. 1, 2, 3, 4, 5. And we could say, hey, maybe the bear market low is in. Maybe we are going to continue to form that Model 2 accumulation, left shoulder, head, right shoulder, and explode to new all-time highs in the coming year. So very exciting stuff happening on Bitcoin right now. I will warn you, we are at very key resistance, and I am actively looking for shorts right now on the backtest of our daily level in confluence with our pitchfork midline. And I will zoom in and I will talk about this later. We'll also talk about the Elliott wave count to the upside. But now that we've hit the 1.618 trend-based Fibonacci extinction target, it is more likely that this is a third wave of an impulse, and we are likely to continue higher after potentially seeing a pullback that could last a week to 2 weeks. We want to see something similar to our wave 2 pullback. And this would be a very good spot. That's pretty much your most important spot to end a wave 3 is at that 1.618 trend-based Fibonacci extinction target. So actively looking for shorts. I do think that altcoins can continue to pump a little bit. We'll go into the total market cap because total market cap is breaking out of its range since February, and we are coming up to some key pitchfork resistances where we're likely to take out the range highs as well of our total market cap. And overall, I expect the bullish continuation on the macro timeframes to continue, but on the lower to intermediate timeframes, I am looking for a bit of a corrective move over the next week where I will be looking for longs on these wave 4 support levels to bring up to new highs and really to take out our 82.8K highs. So we'll talk about resistances above, we'll talk about support levels below, and we'll get into this. Happy Friday, everybody. R Pink, much love to you, man. Thank you so much for being here. Thank you for modding. Travi Trades, much love to you, man. No worries. You need to get that gym session in. So hope you have a good gym session. Hope you have a good weekend, buddy. Thank you for stopping by. Jojo, much love to you. Ryan Hansen, good afternoon to you as well. Why does it turn my GA into Chinese characters? R Pink, I can't answer that, but I think you mean good afternoon with that. So good afternoon to you, R Pink. All right, let's see here. No, much love to you. Welcome in. Crypto Clan World, we are breaking above the 200 daily moving average, and if we close that weekly candle above the daily moving average, we can see continued upside and maybe the potential end of the bear market as far as price action goes. Timing-wise, we still might get a bigger pullback until October, November, December, that fourth quarter of 2026. But I am excited about this, guys, because we have been talking on this channel. I have specifically been talking about on this channel, developing a smaller accumulation pattern in here where we see expansion up into 77 or higher. Really, I was looking at two main levels, 73K and then 77K as our main levels of resistance for this mini accumulation expansion. Now, depending on how this expansion occurs, if it's a 3-wave corrective move, we might come down and make a new lower low, and it would be a Model 1 accumulation like that descending selling exhaustion channel. But if we can continue to break out and break above $82,800, which I personally think is likely, then we can say, hey, macro low might be in. Sure, after the impulse ends, we could get a pullback towards golden pocket, and then real expansion on the weekly accumulation pattern, but it is looking good for the bulls, guys. And also, we are starting to get close to that fourth quarter of 2026. We know that bear markets last about a year long in the crypto market, that 4-year Bitcoin cycle. So very explosive price actioning happening right now, guys. If you didn't get into the long positions, there's other trades to be taken. We can also look at hedge short positions. I am actively looking for that short. We still don't see, I mean, look at the daily time frame. Money flow still looking very strong on Market Cipher, and on NAMI, money flow just crossing into the green, looking very strong after printing that hidden bull div. And guys, I showed you on Monday with the hidden bull div print that printed on Sunday, but on Monday I let you guys know when we printed that hidden bull div that we were likely to take out our 67K range highs. So did I think it was going to be this quick and this explosive to the upside? No, but we have been looking at seeing that breakout of this mini accumulation range and seeing that expansion occur. So we're in the process of that expansion. It is very explosive to the upside. We also know that altcoins have the opportunity to be pumping in the next couple of weeks to couple of months, depending on, Bitcoin dominance is obviously still rising here. We are actually breaking out of this range. Bitcoin dominance could continue to rise to take out kind of the double top highs or intra range double top highs in here because we're breaking out of the channel. We're breaking out of the value area high. What that means is that this is likely to be a 1-2-1-2, and we're in a third wave to the upside on Bitcoin dominance, and then we're probably going to see some 4-5s coming in. So Bitcoin is likely to remain strong against the altcoins. But with the total market cap pumping, that doesn't mean that altcoins won't pump as well. I just expect Bitcoin to kind of be the star of the show until we start to get Bitcoin dominance into some resistance. Now, if we look at the USDT dominance chart, we are coming down to some very key support. I let you guys know in yesterday's live stream, we're looking for a corrective move on some of the higher time frames. We're looking for that corrective wave 4, looking at the 1, 2, 3. Now we're looking at a 4 before seeing a 5th wave to the upside. And we're looking between the 382 Fibonacci and the 0.5 Fibonacci. Well, the 382 was at our point of control. We did break through it today on today's daily candle, and you can see we came down and we SFP'd the range lows. We actually did see an SFP. It's a very shallow SFP, but we did see an SFP of the range lows, which means that USDT dominance could get a little bit of a move up over the next few days to maybe backtest our POC before seeing that drop down and maybe coming to that 0.5 and to backtest our higher time frame value area high breakout. But we are at support. This was one of the support levels I gave in yesterday's live stream right here. This was our first support level. We thought that this was unlikely to hold, and I think that we are ultimately going to see a drop down towards that 0.5 Fibonacci retracement and the backtest of the value area high of our more macro accumulation range on USDT dominance chart. So looking pretty good here, guys, as far as Bitcoin goes. And actually, you can see now that I've moved this volume profile a little bit, our value area high is now aligned pretty nicely with that 0.5. If I just shift that back a little bit, you can see it was down here. Now it is pushed up to pretty much match that 0.5. So that is going to be very, very strong support for the USDT dominance chart. But we're looking at what looks to be an impulse to the downside right now. And this impulse to the downside, 1, 2, 3, maybe we're going to see a pullback in a wave 4 or a retracement in a wave 4 before seeing that 5th and final wave to the downside. Now, if we start with an impulse down, that is actually bad for the new highs being made. That is bad for new highs being made. We could still get a 3-wave corrective move up towards golden pocket and then see like a flat where we hit the naked weekly point of control and then get a move up. But we would have to look at if the initial move down starts with an impulse, we would be looking for a lower high and then a lower low to finish a larger zigzag correction. It's looking good, guys. It's looking good for the crypto market right now, I have to say. Let's go into Bitcoin. Let me just check the chat real quick. Welcome in, everybody. Guys, please do hit the like button today. If you do get any sort of insight into the market from this live stream, hit the like button, share the video. I think today is going to be another really, really important macro update on Bitcoin. I've been trying to keep you guys updated on these macro analysis on Bitcoin throughout the week this week. I think we have really diagnosed well what is happening with the Bitcoin price action here. And, key resistance, guys, even though we've been seeing massive momentum and I'm not trying to short a rocket, I am actively looking to short right now because we're at the pitchfork midline. And what did I tell you guys? When you bounce from the bottom of a pitchfork, you might see a couple rejections from the pitchfork band, but when you break above it, especially with high volume like this, you're likely to move up to back test the net or to test the next major resistance of the pitchfork. Just like when we bounced from the bottom of the pitchfork here, we ultimately moved up to test the midline. And now we are forming that very, very clear range between our pitchfork midline and the bottom of our pitchfork. And so it's that selling exhaustion channel that you often see in a massive move to the downside or a massive move. It's a bigger reversal happens when you start to see that selling exhaustion. The fact that we had weekly bull divs between our 60K lows and our 57K lows, and we had daily bull divs between our 59 and 57K lows is very, very nice support, a nice confirmation for potentially a macro low being in on Bitcoin. So welcome in everybody. Let's see here. Yeah, guys, also real quick, I wanted to say NAMI Trading is doing a 60% discount on NAMI, the lifetime subscription to NAMI. Use discount code Divine Power. Now, that only goes until Sunday night. So if you're interested in purchasing NAMI, this is the largest discount they've ever given. They've only given a 60% discount only one other time in the history of NAMI, and I think that was last Black Friday. So if you're interested in purchasing NAMI, right now is the cheapest it has ever been. Let's see, Peoria Beat, much love, dude. Yeah, Bitcoin is smashing all the levels. It is aggressive, and that's the thing, guys. When we see aggressive and high volume coming in, you want to be careful. You want to wait for a sign of weakness in order to short. Now, I did not short yesterday. As we were coming up into that golden pocket, we just weren't really seeing the rejection we wanted to see. We had a little bit of a scalp we could have taken during the live stream, and that somewhat played out. You would have got a TP1 before getting stopped out on that. I told you guys actively I wasn't going to take that short. But now we're coming up into third wave resistance as well as our anchored VWAP. And remember, guys, anchored VWAPs are the most important thing as far, and for me, it's a trend-based, a volume resistance, but it's a trend-based volume resistance. So if we are truly going to break this bear market downtrend, this bearish downtrend from the bear market, then we want to get above this anchored VWAP and flip it to support. So you'd want to see eventually a flip to support on this thing. Now, I do think the first time you hit it, you generally see some sort of smaller corrective move. If you do see a huge reversal, that means we could make new lows. You know, we'll have to diagnose how this looks. We want to see a slow, grindy move down. And now the fact that we're going into the weekend, this is perfect for this, guys. This is aligning up perfectly for continued upside, maybe next week or the week after next week, because our wave 2 correction. So first off, let's get in. Let me finish reading the chat here, and then we'll get into the Elliott wave counts here. Chicken Salt, good morning, man, from Kiwi Land. Good morning to you, Chicken Salt. Travi Trades, perfect listening. Love listening in the gym. Awesome, Travi. What are you hitting today? Are you doing a push day, pull day, leg day, or just something a little bit different? But great to see you in the gym, man. I'm going to hit the gym a little bit later today. So much love to you, Travi Trades. I closed all of my longs too early. At least it's profits. Yeah, no, never. You can be a little bit discouraged that you closed them, but never beat yourself up over taking profit and locking in profit. Jose, hello to you as well. Thank you for being here. Wagon, it's great to see you in here again. Thank you for joining the community. Thank you for joining the live stream again. Hey, Divine Hood, I also have a gym sesh, but I'm going to chill here for a little bit. Love you. Well, thank you, Wagon. Love you too, man. And thank you for being part of the community. I know you were first time watching the stream yesterday, so appreciate the support, my man. Chad P, it has been a week, that is for sure. But you know what? It's great. This wasn't truly unexpected. You know, we were looking for accumulation in this range. And I mean, you guys can go back and watch my videos from specifically the live streams. I've been talking about a smaller accumulation in here that was going to see expansion into the mid to high 70s. And then I was talking about on the weekly accumulation, we are likely to see, depending on if we make a lower high here or a higher high here, we're likely to see a major pullback that could take a couple months where we could put in that third tap of accumulation, a tap 1 in here, all of this being a tap 2 in here, have a tap 3, and I would expect this to be some sort of range, just like kind of this was a range in here before kind of breaking up. So I would expect that we are still going to see significant retracements on Bitcoin after this impulse ends, and we don't even know for sure if this is an impulse yet. We want to confirm a fourth wave, and then we want to break above the highs to get that high time frame confirmation of an impulse. But it is looking good because we hit that 1.618. Chi-chan, much love to you. I think it's kind of safe to say that the bear market is in at this point. Well, not safe yet, Chi-chan, as far as technical analysis goes, as far as market structure, which is king, right? Market structure is king. We are still making lower lows, lower highs, lower lows, lower highs, lower lows. And right now, currently, we're still at a lower high. So it is not confirmed yet. Now, in my opinion, is it highly likely? Yes. And I was talking to you guys about 57.9K being the bear market low back in February. If you remember, let me actually go look in here. I had this support box on my chart before February, before this low, because I wanted to see us come into this anchored VWAP to test it. Now, we front ran it in February because we had the bottom of our bearish pitchfork here. And you can see we wicked past it to hit the value area low of our 2024 range, 2024 previous range value area low. That's of this range in here. But we had the bottom of the pitchfork once again aligned here. We had the bottom of another macro pitchfork, 3 macro pitchforks, guys, aligned down in that support level, along with the anchored VWAP. And I still have the naked monthly point of control on my chart, even though it's been hit. But we were looking at this exact level for a long position. And remember, guys, I told you months ahead of time that I have a spot buy on Bitcoin at this exact level. I typed this into my limit order. And as soon as we hit that, picked up some spot Bitcoin, because we were looking at, I mean, this is, as far as support levels go, it was really the biggest support level on the entire chart until you get down into like the 30s. So this really needed to hold. You can see 2 macro pitchforks here. If we go to the Binance chart, our multi-cycle pitchfork, the bottom of the multi-cycle pitchfork, looking really good. And of course, we knew that we had a strong rejection in here. If you guys remember, as we were coming up to 82.3 to 82.5, I was looking for swing shorts to take out 60K. And by the way, once we came down to 58K, 59K, I was also looking for a new low because we were looking at based off an impulse, a 1, 2, 3, 4, 5. And then even within this lower 5th wave, we were looking for a 5-wave move, a 1, 2, 3, 4, 5. So even when we came down to 58, 115, I was actually saying, nope, we're going to get one more low, and then we could start the bigger rally to the upside. So Elliott waves are so good for direction, helping you get directional bias. Pitchforks are so good for getting macro support levels. Anchored VWAPs are so good for getting macro support levels. Diagnosing all of this on the chart, we've been really able to trade this entire year from February of 2026. We've been able to trade this very, very successfully so far this year. Let me go ahead and turn off that 57K support, that naked monthly point of control. Now, what are we coming up into right now, guys? So let's get into the Elliott waves. Eric, what's up as well? Sorry, guys. I'm just, all right. I think I got Mind Tapestry. Much love to you, man. And Baby Genius, much love to you guys. Thank you so much for being here. John, Boomdog Saint, good afternoon to you as well. All right, guys, I want to get into this a little bit real quick here. So what we're looking at right now from Bitcoin, from the 57.7K lows, you can see I have an impulse on my chart. And let me just go ahead and turn on our waves real quick for this. I'm looking at an impulse to take out the $82,800 highs and to change market structure bullishly. Remember, we did have a bearish scenario as well where we could have seen the ABC, where we rejected from our 73K golden pocket, and then an impulse down to take out 57K. But that's why even yesterday we were talking about we were at a key internal resistance where if we were to reject there and roll over, we could take out the lows. But now that we've continued to pump up and we've hit the 1.618, it is far more probable that this move up is a wave 3 instead of a wave C. Instead of an ABC with a C blow off top, it's far more probable that it's a wave 3. We had increasing volume and we still do not have bear divs on higher time frames as we're coming up into this resistance. But from the lows, we're looking at this impulse now being the highest probability. In my opinion, this is the highest probability. Now, once you hit a wave 3 target, you're looking for a pullback in a wave 4, and you're looking for a 3-wave move down, a zigzag correction or a complex correction. Actually, sometimes in wave 4s, you get triangles that form. Triangles are very common in wave 4 corrections. We don't know what kind of correction this is going to be. We don't know if it's going to be some sort of flat that comes in here before continuing up. We just know that we're now hitting a major wave 3 target, and this is the area where I would expect a wave 4 pullback. So in other words, shorts, but I'm not looking at swing shorts. I'm looking at day trade shorts to come down to local support levels. When we get down to this support level, I am looking to long this heavily to take out the highs of wave 3 and to take out 82.8K. So let's go ahead and within this larger impulse, you can see we have this initial move up. We have a higher low, or a higher low coming down. And from this weekend low at $62,200, I want to talk about this low here. This is our low, and then we put in a higher low the next week. It was only at $62,500, so it was almost a double bottom, but it wasn't. It was a higher low as far as market structure is concerned. So if this is considered our wave 1 to the upside, this is considered our initial wave 2 to the downside. That means our third wave starts at $62,200. Well, within the larger third wave impulse, you need a sub count of 5 waves inside of this move here. Okay? So within the third wave, you still need a 5-wave impulse within itself. And generally, it is the longest, most explosive, volume-filled move to the upside, which we are seeing right now. But if we're going to go from the 62K lows, you can see we have a wave 1 here, a wave 2 here, and we're exploding in a wave 3. Now, do we see a 4 and a 5 inside the third wave? No, we do not. Not yet. We do not see a confirmed 5-wave move. So even within the larger impulse to the upside, actually, it is likely our third wave continues a little bit higher. But I am being very cautious because we're at key resistance. You can see we had a naked weekly point of control here. Let me go ahead and show you guys that. If we turn on our naked weekly points of control, you can see naked weekly point of control right at the 1.618, right at our pitchfork, or excuse me, our anchored VWAP. And the daily candle close is at the daily candle body right now is at a daily level in confluence with our pitchfork midline. So I am expecting that maybe right now what we're seeing is that fourth wave corrective move. Internal fourth wave corrective move within the larger third wave. So if we're looking at this fourth wave or this second wave, it was about 5 days long, right? So 5-day long corrective move. So within the larger third wave, 1, 2, 3, maybe we're seeing the start of a wave 4 right now. And then the wave 4 could be done. And then maybe we're going to pump up next Monday to make one more new local high to end the third wave. But because we are hitting macro resistance of a third wave, we could try to zoom in and find some sort of pullback in here on lower time frames. But generally, you want it to be about 5 days or longer. Within the larger move, 1, 2, 3, I am not discounting that the third wave could be done here and that we're going to see a larger pullback in a fourth wave that lasts about 11 days long or longer. Now, there's one alternative to this count. We could be looking at some sort of wave 1 here, a wave 2, which is a running flat right here. So that means the third wave would be starting from 62.5, and this is all the third wave. And then we would have to zoom in on much lower time frames to see pullbacks within the third wave to get that internal count within the third wave. This being a running flat in a wave 2 is not my primary count. My primary count is the 1, 2, and then the third wave starts from 62.2. But either way, we're looking for pullbacks coming up relatively now or soon, and then we're looking for new highs after that, maybe in the next couple of weeks. So if I zoom in here onto, let's just go to the 4-hour time frame real quick. Within this, let's say that this is a running flat here. So within this smaller move, we have a 5-wave move here, followed by a small pullback. We have kind of, here, 3, 4, and either way, we really don't have any pullbacks in this move to the upside, guys. This is very, very aggressive move to the upside. So, and it could continue. Remember, the third wave doesn't have to end at the 1.618, but I think it's likely to, just because you can see our pitchfork band is here and our 1.618 anchored VWAP and naked weekly point of control are here. So, for me, it's likely we're going to get a pullback from this general area, but continued bullish momentum. Okay, now, if we're looking at the initial impulse, this initial impulse, we're still looking at a smaller internal 1, 2, 3, 4, 5. We're still looking at maybe taking the high within the larger third wave. So we can pull our fourth wave targets, and because this low is so close to this low, it's not really going to matter if we're pulling our wave 4 targets for the entire third wave to look at the bigger fourth wave, or we're pulling our targets from this third wave to look at our smaller third wave. It's only a $300 difference between 62.5 and 62.2. So essentially, no matter which one we're looking at, we're still kind of looking in the same zone for a support level. And so if we're going to pull our fourth wave retracement, we're going to go from $62,500 up to our current highs that we're seeing now. And your pullback in a wave 4 generally goes between the 382 and the 0.5. Those are your most common targets for a pullback inside of a fourth wave. Now, here's the thing, guys. The 382 acts as strong support and strong resistance in a strong trend. In a strong uptrend, it acts as strong support. And then if you bounce, you expect the strong trend to continue. And in a downtrend, the 382 will act as strong resistance to continue a strong downtrend. But we're in an uptrend, so we're going to talk about the uptrend. So what is 73K, guys? We were just talking about 73K yesterday. First of all, there was a daily order block in here. Now it's become a breaker block in some ways. And it was our logarithmic golden pocket and the start of our non-logarithmic golden pocket. So if we're going to pull that overall golden pocket, let me see, from the lows to the highs, sorry, wrong pull. From 82.8 to the lows at 57.7, and we put on that golden pocket, I'm going to make that based off log scale, because remember, that is a 30% dump to the downside. We have our logarithmic golden pocket and even our non-logarithmic golden pocket coming in at $73,000. Now, when you break straight through a macro golden pocket like this, you can see exactly on top of that 382, right? When you break straight through a golden pocket like this, no reaction really, straight through it. Oftentimes, if you do get a rejection from resistance above, that golden pocket in some ways now becomes a support level as well. It will come down to the golden pocket and will actually bounce from what was supposed to be resistance, now flipping into support. So we have our 382 there, which is likely to bounce because this is a very strong trend. And it's also the bullish backtest of a bearish golden pocket that we broke above. So I am really looking at 73K to potentially add to longs or take new long positions, not only to break out above $79,500, but really to break above our $82,800 levels. So depending on how we come down here over the next week, 2 weeks, in that slow grindy move, if we start to bounce from that area, as soon as we start to bounce, we would want to preferably see bull divs between the lows of your A wave and the lows of your C wave. If we're looking at this, let me draw this better. So if we're getting some sort of A, B, C, something like this, and we can even short the B wave right here to come to the 382. But if we're looking at some sort of ABC correction here, you want to see bullish divergences between the lows of A and the lows of C here, and then you want to see higher momentum waves on your oscillators. And you probably want to go on to the 4 hour and under, looking for bear divs on the 4 hour and under. So what I'm looking at now, if we can get down to that 382, I am going to be looking for a long from that 382. I will wait for it to come down, and I will wait for an actual bounce to occur. Okay, I'm not going to set a limit order there. I'm going to wait for some sort of bounce to occur, or maybe a mini range in here. And then once I start to see some sort of even a 5-minute bullish break in market structure, once we hit the 382, that is when I will enter the long position, setting my stop below wherever that wick low is, and I will be looking for a TP1 to take out your highs, your third wave highs. That at least you want to lock in some profit at the TP1. So that's already a 6.5 to 1 risk to reward ratio, or like we're just guesstimating where that wick is going to be. So it's not officially a 6 to 1. We won't know that until we actually get down there. But you're overall looking to take out your highs around $82,800. But okay, so that's already a really good, nice trade on a wave 5 to the upside if we're looking for that fifth wave. Now let's look at resistance above us, guys, because we do have some resistance above us that above our $83,000 highs. Well, first off, look at this double pitchforks again. Guys, remember the last time we had double pitchforks? Look at that support level right there. Both of them combined, perfect confluence, double pitchforks, explosion, right? So now if we look at these same pitchforks that have been highly, highly respected, where do we see double pitchforks at? $89,500. And it also, time-wise, it would be nice to see another move up into that area, right? If we're going to get a very explosive continuation to the upside. I'm not saying it's going to make it up there, but I'm saying that's a major level for me to be watching personally. If we do start to break above some, we do have some levels in between. So let's turn on all of our levels and let's see what we have to work with. Let's turn on our naked monthly points of controls. Okay, we do have a naked monthly point of control at $81,500, but that is prior to our highs, our larger range highs. We have some naked weeklies. Well, look at this, guys. Where are we looking now with the pitchforks? You have a naked monthly and a naked weekly point of control, 89.5 and pretty much 87.8. So that zone right there already, with our pitchforks being there, is looking like a very, very juicy zone of resistance. Let's turn on our weekly levels. Okay, now we're starting to see some more confluence. We are starting to see we have a resistance zone in here. Maybe we're going to see in our fifth wave a wick above to take out liquidity, but our daily candle closing within this zone of resistance, within this first purple box of resistance, right? But we could wick above it to take liquidity. Now let's turn on our naked daily points of controls. Oh, look at another naked daily point of control up here, right near our pitchforks. I mean, holy cow, guys, there's a lot of nice confluence on this chart. You know, I have to say, a lot of nice confluence. How about our monthly levels? Okay, we're breaking out of the monthly level from yesterday. We were talking about that monthly level in confluence with the 786. We really didn't see a reaction there. I will end up deleting this after the weekly close this week. I'll end up deleting that monthly level, but I want to leave it on the chart right now because right now, even this morning in the Telegram, I told you guys we're back testing it and now it's trying to act as support. So we're kind of chopping and forming a range between our pitchfork midline and our monthly level. And that might be our range that forms over the weekend. And then if we look at, our daily levels, we really don't have too much except another daily level around 81K. So now with all of these levels on the chart, and I know this chart looks disgustingly messy, but we're going to just turn them all on, find the zones of confluence. We mark out the zones of confluence with our boxes, and then we turn everything off and we get that nice clean chart, right? So I'm going to go here is our zones of resistance, our major confluence zones of resistance. All right, now we'll turn all of this off. And you can see here, okay, would our fifth wave, if we're in a larger impulse to the upside, 1, 2, 3, 4, 5, could we end our fifth wave here? No, technically you could, but it would make a lower high, right? You technically want to see this impulse if you're going to start a bull market or if you're going to start a bigger uptrend to the upside. I don't want to say bull market yet, but if you're going to start a bigger trend to the upside, you want to break above these highs. But we could reject here, guys. We could see some sort of sideways range in accumulation where in a weekly accumulation where we do end up rejecting from this area in a fifth wave and we start to form more of a sideways larger accumulation range, right? And so, yes, this zone, I will be looking, at least if we have bear divs between this high and this high, as we're coming up into that zone, I would be looking for at least some shorts there because we do have the opportunity to reject there and to not take out our range highs at 82.8. Okay, but the overall main resistance that I would be looking for potentially a large impulse to end would be around $89,000, 88 to $89,500. Naked monthly point of controls. A bunch of resistance there, a bunch of volume levels of resistance. And then let's go ahead and look, we have ranges. Let's think in terms of volume profiles. We now have this larger range from February, pretty much our entire 2026 price action. We have a smaller 4 or 5 month long range in here. And then if we look at even up higher, I have to zoom out on the chart, guys. Let me zoom out to the daily time frame. And then we even have our distribution range in here. So as far as the downtrend goes, we have 3 main ranges to be paying attention to. Let me get rid of those. Let me just zoom out to the 12-hour chart. And let's now look at some important volume profiles. So let's pull a volume profile and let's look at this volume profile right here. Okay, what do we see? We see our range point of control coming in pretty much right where that naked weekly point of control was coming in. $87,800, right? Pretty much right there. Okay, so more confluence as far as a range point of control as well. Range value area high is coming in a little bit higher at 92. Now that 92 is going to be right aligned with the top of your upper pitchfork band. So that is going to be interesting as well. And then now we can even start pulling some golden pockets. Let's look at some golden pocket retracements. Remember the move down, and I'm just going to zoom out to the 2-day chart so this makes it easier for us. The move down is over a 30% move down. This is over 50% move down. So if we're pulling a Fibonacci golden pocket from the all-time high to our current bear market lows, you want to take this Fibonacci golden pocket and you want to base it off of log scale. So we're based off log scale. Okay, now we're starting to see some really nice, interesting confluence here. We have this zone around 89.5, and then around 93.5, we have our golden pocket at the top of our pitchfork band, of our bearish pitchfork band. So I would say even coming up to 93, and let's go ahead and pull. Remember, this is considered our 2025 range. I call this the all-time high range. Let's pull our volume profile for that all-time high range. I think I should have that on the chart already, right here. Oh, well, what do you see? Your point of control at your golden pocket at the pitchfork bands kind of aligning, right? So we are starting to see some macro confluence where Bitcoin, if we do see some sort of real true breakout here, we could either come up to 89 or we could even come up to 93. Now, I am still expecting overall, guys, I still am expecting a decent move down that is going to take a couple months, right? So we get this impulse that ends 1, 2, 3, 4, 5, maybe even up to 89K. Maybe it's just going to take out the highs, SFP the highs. We don't know yet. But if we get the move down after an impulse ends, you're looking for a 3-wave corrective move towards the golden pocket. And that would give us that nice accumulation zone. And it would allow for time to pass for the 4-year cycle to still stay intact. This swing long, if we get this swing long, if we get a bullish break in market structure on the weekly by breaking above 82.8, whenever this impulse ends, whenever this 5th wave ends, whether it's here, whether it's somewhere in between, whether it's an SFP, I will be looking now for another, well, first of all, I'll be looking for a short from wherever this ends, right? And I'll be looking for a short towards our golden pocket, pulled from the low of the impulse to the high of the impulse. But when we get down to on that move down, I'll look for, once we start to end that C wave towards a golden pocket, maybe towards the 786, we don't know where it's going to end, but I will be looking for ultimate swing long positions for expansion on a weekly level. So this here in October, September, November, December, whenever it's going to happen, this swing long opportunity could be the breakout of our weekly accumulation. And you would expect to see expansion on a weekly level, ultimately taking out your all-time high. So we could be looking for macro swing long opportunities that might be open for 6 months to a year to take out our all-time highs from this zone. Very, very important setup that I will be covering and following closely with you guys in the Telegram and on our live streams and weekly videos. So very, very key things happening here. Now, let's talk about a little bit more of a bearish scenario, guys. We do have that kind of channel that is forming right now. You can see we're finding resistance at the pitchfork midline. We also found resistance earlier at the pitchfork midline. Support at the bottom, support at the bottom. There is still a bearish scenario where we are going to just form a 3-wave corrective move. Yes, it's very rare for a C wave to hit the 1.618, but it's in an expanded correction. You can hit the 1.618, and then if you really start to see this first move down as an impulse, well, you can get impulse, correction, impulse for a wave 4. But depending on how we reject, if we reject from this area, we have to be careful because we could make another lower low and start to see that selling exhaustion channel happen again, where this low here would be the ultimate swing long low, because then you would expect to kind of break out of this ascending channel. You would break out of it, back test it, and then see expansion continue to the upside. So either way, we have macro swing long opportunities and swing short opportunities planned out on this channel over the next couple of months. Now that we have our plans laid out, we just wait. We be patient. We set the trap. We wait. We execute once it gets there if we have proper confirmations. And that is what I am, a confirmation-based trader. But I like to look at the different scenarios. I cover all scenarios. Guys, as traders, we shouldn't get into a mental bias of bullish only, bearish only, right? You don't want to become a perma-bull, perma-bear. You want to map out both scenarios. That way, whatever one happens, you're a winner either way. You're hedging against your own bias. You're hedging against your own self. But you're trading each opportunity as it comes, not trying to force something, waiting for it to get to resistances, waiting for it to get to support levels. Now I want to talk about, let's say we SFP, the range highs in here at 82.8 to finish our 5th wave. 1, 2, 3, 4, 5. We SFP that range high, and then we get now the 5th wave is in and we're looking for a pullback. So let's just do a theoretical fib here. So we'll go from the lows, and I'm just going to put it around, $84,000. We're going to be looking, and we want to use a non-logarithmic golden pocket because it is going to be, this is not a 100% move to the upside. So we're looking around 68K to 67K, right? 67.8, 67K. Well, what is that, guys? We already know that's a very important support resistance flip right here. Kind of support, support, support in here. Resistance, resistance, resistance in here. So it would be super, super nice to see us move down, get that 3-wave corrective move down to 67K, 66K, 68K, excuse me, and then see that big move to the upside. So I'll be looking for shorts, but in a very, very bullish market, you don't have to drop to your golden pocket. Now, it's the most common area, but remember, in a macro wave 2, wave 2s are kind of hard to trade because your main targets, you can bounce from the 382. In traditional markets, like the stock market, the 0.5 Fibonacci, which is the equilibrium, bounces you quite a bit. Golden pocket, of course, is the most common, and then even sometimes the 786. So wave 2s are hard to trade because the range is so big. Most common, obviously, golden pocket. But in a very strong trend, you will bounce from the 382. So let's go ahead and throw on our 382 Fibonacci. You can see that I have strong trend labeled because I know that the 382 will bounce you in a strong trend. Well, guys, I mean, let's talk about pitchforks again. If you break above this pitchfork midline and you start to close weekly candles above this pitchfork midline, and if assuming you're going to have a wave 5 here, you would close weekly candles above that pitchfork midline, you could just see a 3-wave corrective move down to the 382 for a macro wave 2. And then you get your bigger 3rd wave to the upside. You get continuation to the upside, right? So also, depending on how we look at this ending 5th wave, I will be paying attention to a 382 Fibonacci and a backtest of the pitchfork midline, because pitchfork midlines, I'm telling you guys right now, pitchforks work tremendously. So we have a lot to consider over the next coming months on Bitcoin. We have the technical analysis laid out. We have the scenarios laid out. Now we just execute whatever comes. And remember, we don't have to know what Bitcoin is going to do. We just mark out the levels of support and resistance, and we trade whatever comes. Even trading against our own bias. If you're long from down here, we're looking for shorts from up here. We're going to keep this long open, of course, taking some profit, locking in, protecting position, opening hedge shorts against our own bias. My bias is that we are going to come higher. but I'm still looking for a short here. Okay. Now you have to know the context of that short position though. Right now, I would look to open a short from here, but I'm going to be looking to take profit at that 382 Fibonacci. That is not this guy, in this area around $73,000, right? $73,000 to $71,000. So, and then I'll be looking to flip long around 73 to 71 to take out, to up at least to 81, but probably to take out your 82.8K highs. So we have a really nice, you know, Bitcoin trades so technically, guys. And if you know Elliott waves to get a directional bias, also knowing about how the most important thing in the market is volume and liquidity. Well, that's liquidity right there, major liquidity right there. We can also look at our 2-year long range. Now, remember, guys, as far as market auction theory goes, let me just hide our pitchforks real quick. As far as market auction theory goes, any asset tries to find a balance. The market tries to find a balance with it. And that's what ranges are. It's kind of a zone of balance. So we had a zone of balance. For most of 2024, Bitcoin was considered fair value between $70,000 and $60,000, with its ultimate fair value being at $63,000. We chopped around and traded within that, but we were in a zone of balance. Now, after the elections happened, some bullish macroeconomics happened, we break up into new levels of price discovery. And in the year of 2025, we formed a new zone of balance with our overvalued being at around 110, our fair value being around 97, and our undervalued being around 86. So after some bearish things happen, we break that range to the downside and we revisit our prices for 2024. You can see this range was revisiting our fair value for 2024. Now that we've revisited the fair value, what that essentially means is the market is no longer pricing in the fair value of Bitcoin at 2025 prices. It's now repricing it back down to 2024 levels. But now that we have some mixture of this range with this range with this range, we can combine all three of the ranges together to get the overall important high volume node levels within the last 2 years of Bitcoin. So we turn that on, and what do you know, guys? Why was 67.3 such a big rejection earlier a couple months ago? Well, it was because it was our point of control of our macro range. Now, let me show you. Let me go back. It was our point of control at the time. Now that we're breaking above with such high volume, if we extend this volume profile all the way, you can see that our value area, or our point of control, is now shifted down to 64,000 instead of 67,000. So in terms of our macro volume profile of the last 2 years, we are above the point of control, and it's very likely that we close a weekly candle above the point of control. That means that we do have eventually, not right away, but eventually, a high probability of coming up to our value area high, which is around $93,600. Well, guys, let's throw the pitchforks back on. Do you remember what was around $93,600? It is going to be the upper band of our macro cycle bullish pitchfork. And if we throw on our bearish pitchfork, you can see that our bearish pitchfork, where is it at? Bearish pitchfork, it is going to be in the upper band of our bearish pitchfork as well. So we have some very key macro support and resistance confluences. Now, as day traders, as scalp traders, we trade the slop in between, we trade the ranges in between, but there's a few trades a year, guys, where if you can nail these trades a few times a year, you can absolutely become massively profitable on your trading portfolio. And we have some massive opportunities coming up on Bitcoin again. Obviously, the most massive opportunity was 57.7. By the way, I am still in that long from 58.2, and I can show you guys why I got into that long position, because we came down here. I believe I was sleeping when we came down here. Where I'm at in the world, it was very early in the morning, like 4 o'clock a.m. early. And let me just zoom in onto the 1 hour chart, and I want to come down here, and I know I don't want to spend too much time on this because we got a lot to cover today, but as we came down into this low, remember our naked monthly point of control was there at $57,900. Our anchored VWAP was there at $57,900. So we come down, we SFP and hit into our anchored VWAP and naked monthly point of control. We get an initial move up. This initial move up broke market structure bullishly by taking out this lower high. It was a bullish market structure break. And I remember telling you guys in the Telegram, guys, we have now officially had a 1 hour market structure break bullishly. Because of that, I am looking for a 3-wave corrective move to come down to our golden pocket, and this golden pocket opportunity is going to be your ultimate long opportunity, because you could try to catch the knife here, but you don't know for sure it's going to bounce. You could have entered upon reclaiming the naked monthly after you lost it. Upon reclaiming it, you could have entered, but the more safe peace of mind option was to wait for a bullish break in market structure, then get a 3-wave corrective move down. And if you get that 3-wave corrective move down to the golden pocket, that is when you entered the swing long. So we pull the Fibonacci from the lows to the highs of that first move up. We put on our golden pocket, and sure enough, guys, $57,200, $57,300, or 58, excuse me, 58.2, 58.3. Here you go, golden pocket hit. Now, I had entered a little bit down here. That's why my average was around 57.2, but I entered a majority of my position here. Entered a majority of that swing long position right here. And now look at what's happened, guys. If we zoom out and we look at that swing long position, right? Enter around 58.2. Of course, we were looking, stop goes below our overall lows. And now we're looking to see moves up. And I did tell you guys ahead of time that I was looking for that 57K low being the ultimate bear market low. I let you guys know far ahead of time that that was going to be an area where I would consider a bear market low. Now, from that area, I was looking to at least come up to hit the range, the golden pocket from this move down, because this was an impulse to the downside. Remember, this was a 1, 2, 3, 4, 5. So if we pull that golden pocket, I was looking at least to come up to the golden pocket, which was around our point of control as well. And it's a point of control of a smaller range as well. So you can see that already is a 9.75. But overall, we were looking for some sort of accumulation in here, and we were looking at this being a tap 1, a tap 2. So I was looking at, in the tap 2, you could come all the way up and take out the range highs, and that's why this purple box was there. We were looking at coming up to take out the range highs, because we had a naked daily point of control at $67,400, right above your $67,250 highs. So my ultimate TP on that thing, not ultimate, my next major TP on this long was to take out the range highs into 67.3. I did take some, but if you leave some of this open, knowing that this is a bull market swing long opportunity, you leave some of it open always. You get this thing going up to take out 82.8K. Well, look at that trade opportunity, guys. And so that is how you can execute on these swing long positions, where one trade can literally make your profits for the entire year. And so just wanted to let you guys know, now we have the same sort of opportunities on shorts coming up, and another swing long opportunity if we do see something like a 5-wave move here and then a 3-wave move down. This here, we could look at that golden pocket for swing long opportunities that could even play out better than this guy. All right, let me check the chat. I know I've been droning on here. Thank you, R-Pink. Real quick, guys, before I check the chat, I want to take a second to shout out the partners of the channel. So the main partner of the channel is BYDFI. They're a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on your trading fees, and you can earn up to 40% discounts if you do deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses depending on the amount of volume you move based on the USDT derivatives market. So that's not only Bitcoin, but it's all the altcoins as well. Guys, we're going to have a lot of good altcoin trading opportunities here as well. And it's gold and silver, anything against the USDT pair. So in my opinion, that's a really great incentive to earn extra money for just trading on the exchange when you were going to be trading against USDT pair anyways. They're also offering some of the best initial deposit bonuses in the entire industry. If you deposit $100, you can get a 50% deposit bonus, which is over double what most exchanges will give you on a $100 deposit. They're giving you 20% deposit bonuses up to a $1,000 deposit, and 10% deposit bonuses up to a $20,000 deposit, which is also double what most exchanges do. Most exchanges will do 10K for 1K, but not 20K for 2K. So links are in the description. I have partnered with BYDFI to create that Telegram community. Guys, this Telegram community, it's free. It's a private community. It's free. All you need to do in order to join is to sign up with BYDFI using my affiliate link and deposit a minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger bonuses here, but a minimum deposit of $100. That money that you're depositing into the account is not my money. You're not paying it to me. You're not paying it to BYDFI. It's your money. You're depositing it on the exchange in hopes that you will try out the exchange, like the exchange, and stick with the exchange. Now, in this Telegram community, when I am not streaming or making videos, I try to keep you guys updated on Bitcoin scenarios throughout the day. Also, we set a lot of alerts on altcoins and gold and silver, other commodities. So if you're interested, I post when those alerts go off and I'm not live. I will update you guys in the Telegram and let you guys know, hey, we're coming up to a trade setup we looked at. We're coming up to a resistance or support. And I'll tend to let you know if I'm entering the trade or if I'm waiting. So it's a good way to kind of stay up to date with what I'm looking at in the markets. So in order to get into the Telegram, just click the Telegram link. And when that Telegram verify page, type in /verify and then your BYDFI user ID, and it will get you in. /verify user ID. It will get you into the Telegram. And once you're in, you're in. I have 3 other exchange partners, MEXC, Bybit, and Blowfin. Blowfin's a non-KYC exchange. MEXC and Bybit are KYC exchanges. All of them are offering various trading initial deposit bonuses and trading discounts. So it is a way to support the channel to join any of these exchanges. And then lastly, I have NAMI Trading, which is this momentum and money flow indicator you see on the bottom of your screen here. And by the way, guys, as we were coming down into 57K support, as we were coming down here, did we see confirmation to take a swing long? Well, you saw the bull divs from 59K to 57K. You saw bull divs on the regional time frame. You saw money flow bull divs, but even from the 59K to the 57K, you saw multiple drives of bull div locally. So we saw the ultimate confirmation we wanted to take long positions at $57,700. I use NAMI for confirmations to enter and exit trades. And since I've been using NAMI and becoming a confirmation-based trader, my profit margins have gone up quite significantly. So if you're interested in purchasing NAMI, I've partnered with NAMI Trading. And right now, until Sunday, you guys, I have the link pinned, or the discount code pinned in the chat. But if you use discount code Divine Power, you can get 60% off NAMI, which is the highest discount they've ever given. That only goes until Sunday. If you do it after Sunday, you can use Divine 50 and you get 50% off. All right, guys, let me get back to the chat here, and we will go into some more local analysis here. We can look at where's our short opportunities at here on Bitcoin. And I got to scroll up here. All right, Nick Cypher, welcome in, Nick Cypher. Much love to you. Chad P, gotcha. Okay, no. I think it's kind of safe to say the bear market bottom is in. Okay, yes, I also thought waiting for a pullback when we pumped to 69K 2 days ago. Now I regret it. Okay, good. Patrick Schooner, welcome in. Baby Genius, calling it per usual. Well, thank you, Baby Genius, for the comment. I appreciate that. Mind Tapestry, much love to you. It's good to see you in here, as always. Do you think the big players are going to leave all the liquidity around 62K? That is a good question. Let's go to our liquidation heat map. I want to look at the past 3 months of Bitcoin because our range that we've been in since June is about 3 months long. You can see here, this is our June low. Right in here, this June range, you can see that there is a lot of liquidity below 62K and coming down pretty much to 60K, which is the liquidity that was from this parabolic move. You can see this parabolic move here. We left a liquidity trail. In this move right here, we have this kind of parabolic liquidity trail that was created. So we have a lot of liquidity below all of this still and below this here. Do I think it's going to be left behind? Well, right now, I do think it's going to be left behind until we finish this impulse. But after finishing the 5-wave move, 1, 2, 3, 4, 5, right? Depending on wherever it ends, right? We don't know where the 5-wave move is going to end, 3, 4, 5, something like that. You can see a significant retracement on Bitcoin. And remember, we're looking at a larger accumulation with our tap 1 low around 60 to 62,000. Our tap 2 lows in the high 50s, and then our tap 3 low. So if we pull a Fibonacci golden pocket, a Fibonacci retracement from the lows to wherever the high is going to be, and I'm going to just put it right above the swing failure pattern. Our golden pocket is coming in at $66,000. If we look at our 786, and our 786 is going to be coming in around 63. And you really don't, in a wave 2, you don't want to surpass the 786. So let's say we get that 5-wave move up, and then we get a big 3-wave corrective move down towards the golden pocket, down towards the 786. You're not really going to want to take out this liquidity. You could maybe wick a little bit below it to take out the liquidity, but let's see if the 886. I also want to throw on that 886 on the chart, because hitting the 886 in a sideways range, the 886 is very popular. And on the larger time frames, this is a pretty clear sideways range that we're developing in here, right? This range right here is looking like a pretty clear sideways range. So yes, it is possible even to come down in a wave 2 to hit the 886. Is it the highest probability? No, it is not. So I would be cautious with saying we're going to come down and grab that liquidity, but I would have to say it's very rare for market makers to leave that much liquidity behind. 100 million, 120 million. I mean, it's not a super whole lot, because look at, we also have liquidity above our highs. Where are we at here? Let me go to the last 6 months. We do have liquidity above our $82,800 highs as well, quite a significant amount. I do not know why it's not showing it here on this chart, but we do have some liquidity coming up into that zone. And you can see right now we're sweeping most of the liquidity that was coming up to 79K. So it's unclear. No. Yeah, please do hit the like up button, guys. If you did get any sort of insight into the market from this live stream, or if you're just enjoying the live stream, please do hit the like button for me. Please do subscribe and share and all that good stuff. Let me go ahead and turn this off. Let's see here. We could tap the golden 618. We shouldn't tap the golden 618 for correction for higher price. Yeah, in a wave 3. So if we're looking at a impulse to the upside, you don't want your wave 4 to tap the golden pocket of wave 3. So if we pull a golden pocket from the lows of wave 3 to the highs of wave 3, at least our current highs, we don't know for sure it's ending there. We turn on our golden pocket. We do not want to hit the golden pocket at 68.8. So if we hit 68.8, that's going to be a bad sign for an impulse. That's going to be a bad sign that this is a 1, 2, 3, 4, 5, right? Now, in a more bullish scenario, you could still tap this, and you would have to look at a double 1, 2 impulse, a 1, 2, 1, 2, and then you would look for a big 3, and then some 4, 5s, 4, 5s. But that is very unlikely as well, because that means your primary 2, or your primary 1 and your primary 2 would be longer than your initial 1 and 2. Or your secondary 1 and 2 would be longer than your initial 1 and 2. So that lowers the probabilities as well. So essentially, we do not want to come down and hit 68.8. Okay? That would be very bearish in my opinion if we did that. John, awesome, man. You locked in $800 this morning. Well, good for you, John. Keep going with that, man. Keep building that account. I want to see BTC retest the 200 daily. Here, we just blew through it, so many moving averages. Let's look at that 200 daily moving average. So the 200 daily is at 69,100-ish, let's say, or like 69,000. Now, if we come down that far, man, I don't know if I would want to come down that far, to be honest with you. Let me go ahead and pull this volume profile again. Yeah, I wouldn't. I guess you could, because it's not where your POC is, but you wouldn't really want to come back into this value area again. You now want to hold, if we do come down, you want to hold the back test of the value area high. Let's actually look at our wave 4 targets. If we turn on our wave 4 targets, look at where the 3A2 is, guys. So now we have more confluence for $73,000 being a macro support level, right? Because we're breaking out with volume of this range. So if our wave 3 is ending here, we get a wave 4 pullback to back test your value area high. Think in terms of volume profile trading, not even Elliott waves. If you break out of volume profile, you reject from an important resistance above, you'll see a move down to backtest the value area high. If it holds, you expect to make new highs above your wave 3 highs. So for me, $73,000, guys, is our next big swing long opportunity. Or I wouldn't say, yeah, swing long to take out 82K. 82.8, at least to take out your highs from today at 79,500. But $73,000, like I showed you earlier in the live stream, depending on how we bounce from there to come up, that could be a very, very nice long trade, right? And then once we once we start to get towards the end of our wave 5, I'll be looking for shorts, and we can go from there, right? We'll have time to diagnose this in the future. But looking at the next big trade, if you missed out on this opportunity, 73,000 could be that real next big trade, guys. Now, the 50-week moving average is going to be at above us, and look at where our 50-week moving average is, guys. This is more confluence for our resistance box around 81K. Now, if we do reject from that 50-week moving average, historically in bear markets or in bull markets, once you lose the 50-week moving average, you're in a bear market, right? So if we come back up here and we reject here again, that still could put in a lower low, because I want to put on that bearish pitchfork again. Remember, we're looking at still potentially seeing a sideways accumulation in here where we make a lower high, a macro lower high. So if we reject from here, that would be a macro lower high below 82.8. You could see a move down again to take out the low, and you'd be looking more at a model 1, a tap 1, a tap 2, a tap 3, or even rejecting from 81K, you could make a move down in a tap 3. That is going to be a higher low around your POC, but there is the potential to reject from this purple box. That's why it's on the chart. Our confluence is there. Yeah, that's going to be a very interesting level, actually. Thank you, Crypto Clan World, for pointing that 50-week moving average out to me. Very nice. Luciano, thank you so much for the comment. Nice to see you, Divine. Interesting that gold and BTC touched the VWAP from the all-time high today. Yes, it is, man. Yes, it is. And this is our big test, right? Remember, anchored VWAPs are super powerful. You could see a harsh rejection from it. But if we do see a harsh rejection, I would expect that this was a 3-wave move with a blow-off top C wave, and that we would eventually come down to $56,000. Not my primary scenario. That's the bearish scenario. It's not my primary scenario. So possible liquidity trap at 81, 82. Yes, I agree. Crypto Clan World, 81 to 82. We have to pay attention to this. I will be looking for shorts up there if we have proper confirmation. But remember, within our 5th wave, so if we get our 4th wave and then we're looking for a 5th wave, remember, within the 5th wave, you're looking for 1, 2, 3, 4, 5. So you could still get a small pullback from here in a 4th wave before ultimately breaking above it. Either way, it's a good zone to be looking for shorts, whether that's going to be a scalp short inside a 4th wave corrective move or a larger short. I'm still planning at least on trying to get into some sort of short around that move, around that box of resistance. We will check some of the altcoins. Hype is pumping like crazy. Some of the altcoins are pumping. Yeah, we'll check Hype, Anthony. You gave me a lot of confirmation for my investment decision this year. I bought with all the money I've had when I dipped beneath 59K for the first time in July. Thank you so much, dude. Cheechan, you're welcome, my friend. And honestly, man, you were the one who made the decision. I just kind of gave my perspective on the markets, but you're ultimately the one that made the decision for that. So be proud of yourself for that, man. A lot of people are too afraid to buy when we're at macro support levels with bull divs. They still will not buy. And so the fact that you had the courage to do that in a massive downtrend shows that your psychology is on point there. And I'm glad that I could help just give you some clarity on that decision. You know, obviously, guys, I'm not a financial advisor and I don't make financial advice, but what we're doing here is we're just looking at the technical analysis, and we're looking, you know, decisions are made based off technicals, in my opinion, those major decisions. So good on you, Chichan. I'm so happy to hear that. I use moving averages, perfect for scalping too. Yeah, you are very good at that, Crypto Clan World. Okay, I feel like YouTubers talk of 2 possible scenarios, and then one of them happens. Obviously, they say, I told you guys. So summarily, Lowell, you're right, man. We do talk of both scenarios because we're traders. We're not trying to get clout of saying, oh, I told you I'm right. At least I don't. You know, I'm not trying to say, oh, guys, I told you I'm right. You know, you look at me, whoa, I'm awesome, I'm a psychic, whatever, you know. No, it's about making money. And so you map out both scenarios and you're winning either way. So yes, you're going to be right either way because you're trading either scenario. You're just trading whichever one is possible, whichever one happens. Of course, both of them are possible. And it's not about being right and wrong and flaunting that. It's about having a scenario for any scenario. So no matter what happens, you're a winner as far as your account portfolio going up. You know, that's what it's about for me. So I understand the frustration with this comment, and I get what you're saying, man. I do get what you're saying, but you know what? I will continue to do that. I will continue to map out both scenarios. I will continue to trade whichever scenario comes, and I will continue to tell you guys, this was one of the scenarios we looked at, and it played out. And I'm not going to say I'm right, like, oh, look at me, woe is me, you know, stuff like that. But you know, it is what it is, man. Yeah, hit the like button, slackers. Guys, let's see. How many likes do we have? 59 likes, 124 viewers. Let's see if we can't get those likes up to 100. That would be really awesome, guys, if we could get the likes up to 100 today, or, you know, maybe even up into the 75s. Also, subscribe to the channel if you're not subscribed. I will keep you, you know, we're going to go throughout the entire market. Every week, we're going to be diagnosing trades in here, not only on Bitcoin, but on altcoins as well. So much knowledge. Thank you, G. Yeah, Seaman, you're welcome, my friend. And thank you for being in here. The job is not to predict, it's to act. Luciana, I think that's a really good comment. The job is not to predict. And you can predict, but what you're doing is you're looking at different scenarios and you're just trading whatever comes, right? So that way you're set up for either way to be a winner. What Fibonacci levels do wave 4s like to respect? So, Wagon, great question. In a wave 4 pullback, your most common targets for a wave 4 pullback are between the 382 and the 0.5. Now, the golden pocket is generally an invalidation for a wave 4 if you hit the golden pocket. But your most common target zone is between the 382 and the 0.5. Now, the more aggressive the wave 3 is, you're likely to hit the 382 and bounce from the 382. If your wave 3 is a bit choppy in here, a little bit more choppy, then you might drop to the 0.5. And sometimes what happens in wave 4 corrections is you get an initial move down to the 382, you bounce from the 382 only to come up to the golden pocket, make a lower high at the golden pocket, and then you come down to the 0.5 and see that C wave to the 0.5, and then you start that impulse. So that is kind of common too. I've seen that quite a bit. But to answer your question, 382 to 0.5. Right now, it looks like a 3-wave move. If I see a 5th wave, it is okay for it to be small, but still break above 83, but still not break above 80K. Yes, you're right. So, Amadali, you're absolutely right. We could see, right now, it is looking like a 3-wave move only. And sometimes a C wave will come up to the 1.618. So right now we haven't completely invalidated a bearish scenario. But what we do want to see is a wave 4. And even if our wave 5 doesn't break 82,000, as long as our wave 5 goes above our wave 3 highs, we would have a valid 5-wave move. Okay. And if you start this move up with a valid 5-wave move, then you have a higher probability of making a higher low before ultimately making a higher high. So you're right. We don't have to take out 82.8 in order to see an impulse, a valid impulse here. You could, once again, reject from 82.8, come down, and that would make sense as far as a sideways accumulation range, right? So we still have to pay attention to that $82,000 area, 81 to 82,000. But yeah, I agree with you, my man. No Discord channel, Seaman. I only have a Telegram channel. The Telegram channel is free, though. All you have to do is join BYDFI using my affiliate link in the description. Once you've done that, you can deposit a minimum deposit of $100 or more, and then you click the Telegram link, and in the Telegram channel, type in /verify in your user ID for BYDFI, and it will get you into the Telegram. It's free. You really believe the low is in? Manuel, I do not have a strong belief either way. Well, okay, sorry. I do have a strong belief that the low could be in, but I am not going to make macro decisions based off of it, right? I'm not going to make major investment decisions based off of it until I see confirmation. My confirmation, for me, my true confirmation to say the bear market low could be in would be to see a bullish break in market structure on the weekly time frame. So if we zoom out to the weekly time frame, what we would want to see is, remember, market structure is king, right? So from the all-time high, we have a low, a lower high, a lower low, a lower high, a lower low. Now, if we come up with an impulse here and we break above that 82.8, that would be our first official weekly market structure break, bullish market structure break on the weekly time frame. Then if we do see a bullish market structure break on the weekly time frame, now I'm going to say with very high probability our low is in. That is what would give me higher conviction that the bear market low is in. For now, I would say it's probably like a 60% conviction rate that our low is in, excuse me. Okay, we have $15,000+ weekly candle. Yeah. Shift in demand. Yeah, Brian, that's a good point. $15,000 right now, weekly candle to the upside with massive volume coming in with bull divs on the chart. Weekly bull divs, by the way, guys. Lower lows, higher lows, money flow curving to the upside. So yes, historically, when we see this, you're right. We're shifting into demand now, you know, kind of that demand opportunity. We will look at hyperliquid, Anthony, I promise. Check out the 382 all-time high, 57. Could be our wave 4 on the weekly. Okay, so from the all-time high to our lows, we'll look at that 382. Now, remember, you want to turn that onto based off log scale because that's more than a 50% drop to the downside, or 30% drop. You can see our drop is 54%. So you want to take that Fibonacci 382 level and you want to come into your settings and you want to click based off log scale. So actually, we are at our 382 right now. Very interesting. Very, very interesting. I mean, this is resistance, guys. It's our pitchfork midline. You know, just based off the pitchfork midline alone, I'm really paying attention to this zone. If you add in your anchored VWAP from the all-time high, it's even more important. You add in your 1.618 trend-based Fibonacci extension, it makes it even more important. You add in the naked weekly point of control was there, it makes it even more important. You add in the daily level that's at 77,250, makes it even more important, right? So we have very important resistance where we're at right now. When is wave 4 invalidated? So Nature Joe, our wave 4 would be invalidated. Let me zoom into the daily time frame here. Our wave 4 would be invalidated if we hit the golden pocket at 68 point, pretty much 69K. You do not want to hit the 69K golden pocket. Now I'm looking at the smaller internal third wave. 1, 2, 3. You would want to see a 4 and a 5 first. Even if we're looking at the bigger one, 1, 2, 3, you do not want to hit the golden pocket. So whether you pull the golden pocket from this low to this high, or you're looking at this low to this high, you're looking around 69K pretty much, 68,974. That would invalidate it. Look at respect on the 2-day of this pitchfork. My God, you plotted this well. Well, thank you, baby genius. Yeah, look at this thing, man. It's incredible. Your body, your candle body closed. You wick down to hit the value area low of your 2024 range. Right here. That was your 60K low in February, but the candle body closed at the bottom of the pitchfork. Now we hit the bottom of the pitchfork twice down here with bull divs. And this is the cool part, guys. Down here, we had so much confirmation for a swing long because we had weekly bullish divergences on Market Cipher between these lows. We had daily bullish divergences on Market Cipher between those lows. We had daily bullish divergences on NAMI. We had money flow daily bullish divergences. But even within this little area right here, and remember, we were also looking at the Elliott wave count. We were looking at a 1, 2, 3, 4, 5. So we wanted to see one more low below 58K. And between these two lows, you can see triple drive of bull div, money flow curving to the upside. So you had your regional bull div, you had your local bull div, you had your money flow bull div, you had your bull div, money flow curving to the upside. It was that ultimate trade setup. I tell you guys, a lot of people ask me, which is better, NAMI or Market Cipher? Well, I like them both in confluence with each other. And my ultimate trade setup, my ultimate confirmation setup, I should say, is when Market Cipher has one drive of bull divs and money flows bottomed out and starting to curve to the upside. And when NAMI has multiple drives of bull div and even sometimes that local bull div and money flow bull div. So we had the ultimate setup into ultimate support here. No wonder why that could be a bear market low, right? That's just my opinion. Okay. Shoot, I am so far behind in this chat. With a short here, would you put your stop loss at 80K? No, if I'm shorting now, I'm putting my stop loss above the wick. So here's the thing. if your third wave is done with hitting that 1.618, you're going to want to put your stop loss above that. Shoot, let me delete that. You're going to want to put your stop loss above the wick. So let's say you're shorting the back test of this pitchfork, stop goes above the wick, and then you're targeting that 382. Remember, the 382 is also the back test of the value area high of our range of 5 months long. So that is not a good risk reward ratio in my opinion. Now, here's another scenario I'm looking at for the short, guys. Remember, first off, within the wave 3, we're actually looking at seeing one more move up. 1, 2, 3. We need a small 4 and then a 5. So if we SFP this high on Monday or Tuesday, or even over the weekend, maybe on Sunday, I'm going to be looking for a short from the SFP of that high at $79,500. But let's say the high is in of our wave 3. What I would be personally looking for now, I would be zooming in on the lower time frame. So let's go to the 1 hour. Do we see bear divs? Yes. Money flow is topping out. Do we see multiple drives of bear div? Yes. Money flow bear div? Yes. So we kind of have that ultimate setup on the 1 hour for a potential short. The money flow is scary to me. Let's go to the 2 hour chart. Do we see 2 hour bear divs? Well, yes, we do here and not here. Do we see bear divs on NAMI? Not really, but we do have some money flow bear divs coming in here. Okay. So what I would be looking for, and look at this, looks like a triangle to me. It looks like we're forming a triangle in our internal wave 4. 1, 2, 3, 4. We could get one more high coming in here. So right now it's dangerous for me to look at shorts because we're not really breaking even local market structure on the 15-minute. We're not even really breaking local market structure bearishly. I would want to lose the VWAP at least. But if we're looking at a short, because we do maybe have a 5-wave move down, 1, 2, 3, 4, 5. We do have maybe a 5-wave move down. So now I would be pulling a golden pocket 786 from the highs down to these lows. I would be looking at this zone for a potential short between, what is that? 78,240 to like 78,8. This zone in here could be your short opportunity zone for that bigger move down to 73K. But I would really want to see that kind of play out first. Right now, it looks like we're forming some sort of triangle in here. And I'm a bit concerned that this triangle is going to break up in a smaller wave forward to make new highs. I want to really wait for a range. I told you guys this morning in the Telegram, we are hitting our 1.618. We are hitting our anchored VWAP. We are hitting our pitchfork midline. But I am not trying to short a rocket. I want to see a sign of weakness first. We have not really seen a sign of weakness yet. Even look at this 15-minute order block bounces you. You get one little 15-minute order block, you get a bounce. So I would like to see us at least come up and look at, we have some internal liquidity right here into that golden pocket. So maybe seeing a move up to 78,350-ish, grab that internal liquidity and then make a move down. We're going into the weekend as well, so we can expect kind of like maybe a slow, grindy move down over the weekend, where Saturday we spend most of the day just going slow sideways and down. Okay, you got me here. Crazy good explanation. Well, thank you, Samurai Lolo. I appreciate it, man. And honestly, I appreciate the comment. You making your voice heard there, because I understand that is frustrating. You know, I understand it's frustrating when people say, "Hey, I told you so. We were right here." Honestly, guys, it really is not about being right or wrong as far as bragging and telling everyone, "Oh, I called the top or I called the bottom." It's about being right or wrong for yourself, so your portfolio grows, because ultimately we're trying to grow our portfolio. We're trying to grow our wealth. So you want to be right. You want to put yourself in a situation where you are right no matter what. You want to mark out the bearish scenario. You want to mark out the bullish scenario. You want to trade whichever one comes with a proper confirmation. So that way you're right no matter what. And then it's for you, not for anyone else. It's for you, so you can grow your portfolio. But I appreciate that, man. I appreciate you. Anthony, yes, we will do hype. Okay, I'm sorry, Anthony. Let me just scroll down to the bottom of the chat. Samuel S., welcome in, brother. ETH, we'll check out ETH. Let's get into some of the altcoins, guys. I don't have enough time to read every single thing on the chat here. We're starting to get more and more people come into these chats. And Wow, we got our likes up to 77. Thank you guys so much for that. If we can get up to 100, I would really, really appreciate that, you guys. But let's go ahead right now. What I'll do is I'll set an alert on this local golden pocket. And if we come up here during the live stream, we'll look at a potential short opportunity from there. And it could even be just a short to take out that local low right here. So it could be a scalp short opportunity. But knowing that we should make one more high here, it's going to be a dangerous short, and I'm letting you guys know that right now. I would rather see an SFP of this. Okay, but let's go on to the daily time frame. I'm going to look at hype first because Anthony's been asking the whole stream. Hyperliquid. Now, Hyperliquid is SFPing range highs. Guys, by the way, on hype, I told you guys when we came down here, SFP into a golden pocket, I let you guys know that this was a potential bigger flat correction in here, and we could continue up to new all-time highs. So we just made a brand new all-time high on hype today. We're SFPing the range highs. So we have a sideways range here, guys. And what market makers like to do is they like to see a drop down to take out the lows, and then we need, and then they'll usually pump up to take out the range highs. But let's look at the drop down here. So this is what's super, super important. First of all, context. We're in a bigger impulse. 1, 2, 3, 4. Are we going to get a fifth wave now to make new all-time highs? Technically, we already have, right? But here's the bigger thing. The move down from the all-time high at 76.9. We have move down, correction, move down. That's a three-wave corrective move that took out the range lows. And now that we're taking out the highs, we've officially broken market structure bullishly. Well, really, as soon as we took out these B wave highs, we've broken the market structure bullishly. Remember, I was looking for a long down here because if we pull our trend-based Fibonacci extinction for a three-wave corrective move, A wave here, B wave here, and if we're looking between the 1-to-1 and the 1.236, I said the 1.236 looks really nice because it would grab our liquidity of the range lows and it would be into a golden pocket. So down here, I let you guys know about this weeks ahead of time. Also, what we were looking at, and we also took the short from the 786 up here. It was a 786 and a naked weekly point of control, I believe. Down here, we lost the value area low, and if I zoom in on lower time frames, we lost the value area low, and we back tested the value area low. Let me just pull this back a little bit. We lost the value area low. I guess we didn't back test it, but we came, once you lose the value area low and you close daily candles below the value area low, now you're looking to grab the range lows. So in all this chop here, I remember we were talking about it in a live stream before it happened. I said, guys, I'm not longing in here because we're below the value area low. If we get a confirmed SFP, then I'll look for, and then you really can get a reclaim of the value area low. That's when you can see a big move. But let's talk about this now. I want to zoom back out to the daily, because it's super, super important to know that this was a three-wave corrective move into your target, your 1.236 target for an ABC correction. So now we have a very high probability, well, now it's confirmed that this was a three-wave corrective move down. Ultimately confirmed now, no questions. So now we're looking for an impulse to the upside. Could we say this is a 1, 2, 3? The 3 might be ending with an SFP of this high. We're going to get a pullback in a wave 4, and then we're going to get one more high in a wave 5. Yes, it is possible. So let's go ahead now, and we want to diagnose the move up. Let me just get rid of these real quick. I was doing some, I'm looking to get in on a hype long, actually. So now we know impulse is likely here from the lows at $51. Could this be a 1, 2, 1, 2, 1, 2? Because you're seeing that kind of contracting diagonal, those 1-2s building. So let's zoom in on the 4-hour chart. We have our move up. We have a pullback. We have another move up. We have another pullback, another move up, another pullback. And then you finally get your big extinction here. What I would say is this could be part of a 1-2, and your higher degree wave 3 starts from there. And then you would only be looking for 1-4 and 1-5. But within your third wave, you have a multiple 1-2 impulse. So within the third wave, you would have to look at, maybe some 1-2, 1-2. You're looking at a 3. So even if we're looking at the lower degree wave 3, we now need some choppiness. And actually, this could be the choppiness, a 4, 5, 4, 5. You have some choppiness in here, that buying exhaustion channel coming in here. What I would say is let's focus on the larger structure. 1, 2, 3. Now, within that internal 3, you could be done because we have some choppiness down here. We have some choppiness up here. So let's say the SFP is a good level to end a wave 3, right? The SFP of the range highs would be a good level to end the wave 3. Now what we want to do is we're above the value area high of the range. We want to pull that volume profile. As long as we stay above this value area high, hype is in business to continue to make new highs above today's high. So let's pull our Fibonacci wave 4 retracement. We'll go from the lows of wave 3 to the highs of wave 3. We're going to put on our wave 4 targets. Well, look at, just like with Bitcoin, guys, coming down to 68.5, 68.6, it would be a bullish backtest of your value area high. So maybe we're ending wave 3 with a liquidity grab. We're going to see a pullback down to 68.5, and then from 68.5, you would expect to see one more impulse. Remember, this is going to be a 5-wave move within itself. One more impulse to at least take out today's highs. So now, knowing that, what I want to do is I want to take a long opportunity if I have proper confirmation at the 382, at 68.6-ish, let's say. I am going to set an alert there right now, and I am telling you guys right now, if I see low time frame bull divs, like on the 1 hour, 2 hour and under, and look at, we are starting to get that selling exhaustion channel or buying exhaustion channel. You can see this nice, let me fix that. We have this nice buying exhaustion channel right in here. You get the initial aggressive move up. I talk about this on my channel a lot. Aggressive move up. Now you start to get the choppy overlap in here. This is buying exhaustion here. So if we see bear divs inside this buying exhaustion channel, you know that we could be getting a reversal soon. So do we see bear divs? Yes, we do. Money flow looks absolutely bullish though. We see regional bear divs, local bear divs, money flow bear divs on the 1 hour. So now we know we're getting close. We're getting close to a pullback here, guys, because we grabbed the SFP as well. We had a valid liquidity grab, at least right now on the daily time frame. Let's go to the 2-hour chart. 2-hour bear divs, yes. Money flow curving out, yes. Bear divs here, yes. Money flow. Okay, let's go to the 4-hour chart. 4-hour chart. No bear divs. Money flow still looks good. We do have very slight bear divs here, but no money flow bear divs. Actually, kind of money flow bear divs in here. What I would say is this chop in this channel could continue a little bit more, but we are in the buying exhaustion channel. And if we do SFP the highs one more time, you could get that move down to the 382. Either way, knowing that I'm not looking for longs now because we're seeing low time frame bearish confirmations. On the 2-hour and under, we're seeing bearish confirmations. So clearly we're not longing right now, but we want to long any pullback we can get. Any pullback we can get, we want to long that. Wow. I don't know why. Okay, I guess our value area high is coming in a little bit higher now, 70.81. So honestly, I would actually like this to chop a little bit higher so that our 382 could align with that value area high. So I would want to honestly chop up to around $81.23, around there. Not exactly, but let's see if this can continue to chop up a little bit. But I'm not going to be looking for shorts yet because I don't see enough yet. Money flow is super bullish. And remember, bullish money flow, a majority of the time will overpower bearish divergences. So until our money flow starts to cool off a little bit, I'm not looking for the pullback. I want to go to the 8-hour time frame because the 8-hour time frame is really nice to look at money flow. And look at the money flow here, really nice, but it is starting to round out. You can see it's starting to round out a little bit. NAMI does not have bear divs either on the 8-hour time frame. It does have some within the buying exhaustion channel. You can see within this little channel, we're starting to get some money flow bear divs. Not the best looking, not the best confirmation. What I would personally be looking for, yes, if you took the SFP, I would stay in the short, but I would be looking to take some profit on the back test of the value area high around 70.8. Now let's pull this to our current high, going to that low at 68.5. I do like that 382 still. And let me tell you why, because when we zoom out on the daily chart, you can see our higher time frame daily The value area high is aligning with that. So I will be looking to long that if we pull back in the next few days. And I would expect it not to happen over the weekend. This took about what? 1, 2, 3. Actually, that was only a 2-day pullback. So if we see a pullback over the weekend and then come Monday, we're hitting into that 382 value area high, I would look for longs here to take out this high. Now we're in all-time high scenario. So you're going to say, wait, Divine Hood, how do we get our target for the wave 5? Well, there's a couple ways to get a target for a wave 5. Depending on the pullback, you could pull a Fibonacci from the highs of a wave 4 to the lows of wave 4. You would put on your wave 5 targets, which would be between the 1.236 and the 1.618. So 80 to 83.5 or 83.6. That's where you would be looking for your wave 5 to end. And really the 1.618 is the better target in my opinion. But we can also pull some pitchforks. Remember, pitchforks are really good to look for resistance levels and price discovery. And what I would do is we can pull our wave 3 pitchfork, because if this is a 1, this is a running flat in a wave 2, this is our wave 3, this is our larger wave 4, and we're going to see a wave 5 up. We can go a pitchfork from the lows of wave 3, because this is a running flat, to the highs of wave 3, which I would probably... Actually, sorry guys, let me fix that. So in this move up, let me just hide this range real quick. We're looking at this, and the reason why I wanted to long this is because I was looking at a flat in here. Your end of your wave 3 is actually here. You have your push down, a push up to grab those highs, and then a push down. This is a larger flat in here. A flat for a wave 4, and then you have a wave 5 that comes up. So now that our flat is playing out perfectly, you would pull your Fibonacci or your pitchfork, something like this. And now in our wave 5, remember, a wave 5 is not going to go too much higher than a wave 3. So we want to change the settings to a skiff. All right. And I would say, let's see if it's been nicely respected. You can see we had a little bit of a rejection here, a little bit of a rejection here. So it does look like it's being respected. I would be looking towards, yeah, $83. Look at where our 1.618 was. Remember, it was at 83.6. Well, that's where the beginning of your pitchfork band is. But our wave 5 could keep going 1, 2, 3, 4. It could keep going all the way to the top of the pitchfork band or even to the top of the pitchfork. So we'll keep this pitchfork on, and we can look at, first we need to get our pullback in a wave 4, because it's not guaranteed that our wave 3 is ending here. It's not guaranteed. It could, our wave 3 could keep going until 83, 87, and then we could see a wave 4 pullback to backtest the midline, and then see our wave 5 to come up to the top. So we have to be patient and wait for our wave 3 to get better confirmation that it's ending. And how do we do that? We zoom in on lower time frames and we look for low time frame market structure breaks. So we don't have enough data for that yet. If we zoom in on like the, let's say the 1 hour chart, I would want this market structure in the buying exhaustion channel to break. So our buying exhaustion channel, I would want to see that break, because right now, even locally, high, higher, low, higher, 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 high. We're still continuing bullish market structure in here. So in order to confirm our wave 3 is maybe done with, I would want to at least see probably this channel break down, this buying exhaustion channel break to the downside. But hype is looking pretty good. Now, if I go on to hype USDT on Bybit, okay, and we have a base pitchfork. So from the base of our the base of our impulse, we are looking at this pitchfork. And let me go ahead and you can see the golden pocket that was front run here. We hit it in here. Get rid of that. And then we also hit a naked daily point of control down here. It was a liquidity grab into a naked daily point of control. So we had our perfect support right down here. I can delete that now. And look at, once we get back into our pitchfork, it's no surprise to me that we're seeing the chop in here, a little bit of a rejection, little bit of a rejection, little bit of a rejection. And as soon as we confirm back into the pitchfork, that's when we get the explosion. We are coming up to our pitchfork midline. Now, remember, guys, pitchfork midlines are no joke. It was also an SFP of the range highs. So I would say it's highly likely that our wave 3 is going to be ending around here. Just like with Bitcoin, our wave 3 is probably going to be ending around that 1.618 in anchored VWAP. So if we're looking for a wave 4 pullback, let's pull those 382s. And yeah, I mean, like, guys, so nice, right? If we get a pullback to that pitchfork band and then you get another move up in a wave 5, it could just be up a little bit to come up to like 82, 83, or it could be a big move up into some of these areas. So we would look at a couple of things here, but I actually like this pitchfork better because you can see how nice it's been respected already. I would look for a pullback to like that 68.5, and then we could start looking if we bounce from 68.5, then we could start to look at those levels, and we'll have time to cover that in the future, guys. Okay. Also, the value area high of the range, you do not want to break below the value area high. And actually, let me pull from there. Yeah, that little bit changes it quite a bit, huh? What I would say is you want to kind of hold that. Now, if you come back a little bit below it and then reclaim it instantly with an impulse, like, that's good. I'm looking for longs on pullbacks on hype. Let's just say that. So that's it for hype. Let me check the chat, guys. I'm going to scroll to the bottom. All right, let me see. XRP watching loss and retest of VWAP for short. What's your opinion? Okay, let's see Travi trades. XRP USD. So you're looking for a loss. Well, first off, remember yesterday, Travi, we were at the base of the pitchfork, of our bearish pitchfork. We broke out and we hit the point of control. Now, remember yesterday, I talked about how we could see a fake out here where we hit into the point of control, and then if we fall back inside the pitchfork, that's going to be really bad. So we are rejecting from our point of control of our range at $1.43. And I said yesterday that it was likely that we could come up there. So nice kind of resistance there for a rejection. Let's pull our Fibonacci golden pocket 786. Yeah, and your 786 was also right there as well. So we're rejecting from the 786 in your point of control. This looks very, and you're impulsing from a low. Like there's no one in here. Like, right, there's no 1, 2. Could you say that's a 1, 2 and this is a 3? Highly unlikely. So all of this, actually XRP, guys, and when XRP runs, it runs. What I would say is XRP from the ultimate low, this could be a much bigger major move up. A wave 1, wave 2, and then you could get 3, 4, 5. You could see XRP push up back up into its prior range. This upper range in here. Look at this is our all-time high range for XRP. So what we want to look at, and then you kind of formed another range down in here. We're not even breaking out of our lower range yet. You can see here that the value area high of our lower range is at 155, where that liquidity is. So I would be very careful for watching for an SFP for 155. I'm going to set an alert for a short there. But with this move up being highly aggressive, very straight up, and it's from an ultimate low, we could be looking at a much larger impulse to the upside, where all of this is a wave 1. We get a pullback to backtest the pitchfork and the value area low in a wave 2. And then we get 3, 4, 5. We could get a major move on XRP. So we want to look at our prior range value area. So this upper all-time high range. Let's look at this. So our value area low is going to be coming in around 197.8, or like let's just say 198. It's coming in right around 198. $1.98. Our point of control of that upper range is around $2.39 or $2.40. Now, we have a very aggressive move down here. So we want to pull our golden pocket or a Fibonacci retracement from the all-time high down to those lows. Let's see. Close enough. And we want to put that based off log scale because that's definitely more than a 30% drop to the downside. I see 2 major zones right now for macro resistances. Point of control to golden pocket with liquidity resting there, and 786 value area high right in here. That's going to be a small one, right? But that, look at that value area high, 786. You could also come in and look at your monthly levels, your weekly levels. But I would say this really could be a massive breakout, because when XRP decides to break, guys, it decides to break. We could be looking at a bigger move, even if it's a 3-wave corrective move. We have to look at this as an impulse. There's no other way to look at that. It's straight up. So we could look for impulse, correction, impulse for an ABC, where we take out maybe this liquidity right here and then roll over and come down to your golden pocket. Remember your golden pocket, your macro golden pocket at 90 cents was front run. But because we're moving up so aggressively, we are at the point of control of our range. This is definitely a resistance where I'd be waiting for a pull, or expecting at least a small pullback. We're already seeing that small pullback. Now locally, let's go to the 4-hour chart. Man, you are not even really. Yeah, so I think what you're asking, Travi Trades, if we lose the VWAP, would you look for a short? Would I look for a short? Well, very similar to, what was it, hype right now. It looks like we're forming some sort of triangle in here. Low time frame triangle right in here. I personally would like to see, and you do have mini bear divs. Bear div, bear div, bear div. Here, money flows finally topping out and curving down. Look at the multiple drives of bear div on NAMI. The money flow bear div on NAMI. So yeah, you are seeing confirmations to look for a pullback soon. We did hit into the point of control. If you lose the VWAP, that could be, I want to see a bearish market structure break, Travi Trades. In order to see a bearish, a short for me, high, higher low, higher high, higher low, higher high, higher low, but this is your first lower high possibility. So we could just do something like this, a 3-way flat, and then continue up. I would want to see a bearish market structure break. I would want to take out the low at 134.6. And then I would want to retrace afterwards. And I would short the retracement, whatever that golden pocket retracement is. But for now, on the 1-hour chart, we're seeing confirmations to start looking for shorts, right? Because multiple drives of bear div. 2-hour chart, do we see it? Yes, we do. Look at bear divs, money flow, bear divs. Now on Market Cipher, money flow looks hyper strong. That is concerning to me. We are not losing the VWAP. 4-hour. 4-hour, no bear divs. Okay, so this tells me that we could see a lower time frame pullback, but the higher time frame is likely to continue pushing higher. Really, I think a better level to short for me personally would be a liquidity grab into the value area high at 155. That's also where your 786 was. And let's look at the weekly time frame. Well, you do have a weekly level coming in at 147. You're actually at a monthly resistance right now. You can see you wicked up to hit the point of control, but you have a monthly resistance that we're at right now, where this candle body opens and closes. You do have a daily level at 148.5 and a weekly level at 147.5 pretty much. So that is actually a little bit concerning with both of those there. Now, if we also have some points of control there, I would have to pay attention to that zone. So let's look at our naked weeklies. First off, we have a naked weekly that you can see right now. It's also a monthly level. I showed you guys that right at 137. We had a monthly and a naked weekly. So that's where our candle body right now is at. But we wicked up to hit the POC. But you can see on that POC, the point of control of the naked weekly point of control actually was not hit. So what we might see, Travi Trades, is an SFP of the high from earlier today into that naked weekly and see some sort of double top where we could short the double top. So if we hit into one, I'll set an alert here. We might get a double top from today's high into that naked weekly, and then we might get the short opportunity. But because we're breaking out, and if we close the daily candle above the pitchfork I would only expect a pullback to backtest that pitchfork, and then I would expect continuation. Naked dailies. We're probably not, yeah, we're not going to go back far enough on naked dailies, but let's look at our naked monthlies. Yeah, and we really don't have any naked monthlies anywhere near this, so I want to go back to naked weeklies. Let's look. Yeah, geez. You're pretty much at your last naked weekly point of controls at 143, where we kind of topped out today. Man, XRP, and remember a couple weeks ago on XRP, I was showing you guys how XRP is primed to explode. Because look at this, as on the weekly time frame, weekly bull divs, new weekly bull divs, money flow weekly bull divs, money flow starting to bottom out on NAMI. So, I mean, it is looking primed for a weekly push to the upside, like a larger time frame push to the upside. Is it going to go straight up like it's been going? No, unlikely. But I would suspect that XRP could come up to 155 at least. You're probably going to see a pullback. Even if we get a double top over the weekend or so, you're probably going to see some sort of pullback from this 143 resistance. Now, you do have a small, the weekly and the daily level at 147 to 148. If we break above the POC, you're probably going to see a small scalp short just to come back test that POC before coming up to value area high. So for me, if you do take a short from the weekly and the daily, it would be a scalp. You would have to get in immediately with proper risk management. You would have to make it worth it, right? So in other words, let's go to the 2-hour chart. If you come up here, maybe you're going to reject from the daily, and as soon as you lose the weekly, you could enter the short. Your stop would go above the daily, and then your target would be the POC. That is still a 3-to-1 scalp short right there. You would have to nail that, though. You would really have to nail that. Yeah, so Travi, we're looking for a retrace, whatever retrace we see on the daily time frame. So the retrace could take a week or 2 weeks, right? But you can see clearly this looks like a big wave 1 impulse. If we get a retrace to in a wave 2, that wave 2 support could give you a nice swing long position in a third wave, and then you look for a 4 and a 5. So what we could see is maybe over the weekend, kind of forming a range right around this POC, maybe some double tops in here. And then if we get a pullback that takes a couple weeks, we could pull back to back test that pitchfork and look at where your value area low would be in the back test of that pitchfork. And if you're back testing your value area low and you're holding, you would expect to at least move up to the value area high, but I would expect that we're probably going to break up and at least sweep the range highs of your previous triangle range. So in other words, the highs that are at, what is that, 167? But your wave 3 could continue even pushing much higher than that. We would have to see how this pullback looks in a wave 2, how far it gets down. But really, I would not want to lose. I would not want to fall back inside the pitchfork, and I wouldn't want to lose the value area low either. So you really wouldn't want to come below 125. But yeah, this looks nice, man. This does look nice for continued upside after some pullback. We might get the pullback now, or we might range up in here for a little bit. We'll keep an eye on that. And I will try to keep you updated in the chat on that. I set an alert on that naked weekly at 143.3. All right. And yeah, thank you, Travi Trades. All right, let me scroll up in the chat, guys. Man, I'm sorry. There's no way I'm going to be able to cover everything today. I want to go through ETH. And guys, if you really want me to look at a coin, I hate to be that... you know what, never mind. I'm not even going to mention it. Ethereum is coming up to its range highs. So we have a sideways range, right? Here's our sideways range. And we covered Ethereum yesterday, but Ethereum double bottomed around your 5-year long point of control. Now, Here's the kind of the crazy thing with Ethereum. We can't really count this as a 1, 2, 1, 2. Here's your 3, and then you're going to get 4 5s, 4 5s, because that first initial move up was a 3-wave move. So because of that, and you didn't take out the low afterwards. It was also a 3-wave move down. So we could be looking at some sort of larger flat correction in this area, right? A larger flat correction being built, a larger accumulation. Let's just say accumulation range, right? You have your tap 1 in here, your tap 2 in here. If we take out the range highs, which are highly likely now, you can see we're highly likely to take out those range highs. We're also at our ABC target zone. Take them out, and we could see a big retracement. Now, that retracement could be a tap 3 around the bottom of the pitchfork, around 1750, and that would give you your left shoulder, head, right shoulder, or tap 1, tap 2, tap 3, accumulation, explosions to the upside, right, on Ethereum. Or we get a model 1 because we would come down to the value area low of our 5-year long range, and we would take out the double bottom. And then we would get that explosion. But either way, now that we're about to break weekly market structure bullishly, because we are coming up, and let me get rid of this. This is that. We'll get rid of this naked weekly because it's been tapped. So now that we're pushing up right now and we're very close to taking out your range highs, that's going to be our first official break in market structure bullishly on Ethereum. I am really going to be watching that 2542 level, guys, because this could be an A, B, C, take out the range highs, and then roll down. Now, if it's going to be a impulse, which once again, I don't think it's likely because this is the low, not this. If we're going to see an impulse, then we would also want to, where's it at? 1 point. You would push up to around 2,800 where both of your key anchored VWAPs are. Your anchored VWAP from the bear market lows, your anchored VWAP from the all-time high, coming in around $2,800. So that would definitely be the next resistance for me. And in a very bullish scenario, I covered this yesterday with Ethereum, but going from the all-time high down to your lows, your current bear market lows, around $3,200 to $3,300. Think in terms of our pitchfork. It would be the midline of your pitchfork in confluence with your golden pocket. That would be a for sure short level for me. For sure a short level around 3,200, 3,300. But for now, we're in our zone where we would really be looking for a major pullback. And the way I'm looking at this is from the lows here, you can see, let me get in here. Right here from this high, we have our confirmed 3-wave corrective move down. And clearly from that low, this is impulsive so far. So we have to look here. 1, 2, we're in the 3rd wave right now. So maybe the 3rd wave is going to end with an SFP of the range highs. We get a pullback in a wave 4, and I would really be looking to backtest the pitchfork band, and then we get a wave 5, and maybe that wave 5 only comes up to the 382, or the 1.236 at 2542, or our wave 5 could even push up to hit some of these anchored VWAPs. But the thing with Ethereum is look at in here on Ethereum, there is really nothing keeping us from exploding up to around 2,800, right? If we break above 2542, we're probably going to see a quick move through all of this because there's no resistance in here. Quick move down means we see a quick move up through it. There's no real resistance in there. So you break above 2,500, you're going to go up to 2,800 pretty easily. Yeah. Now, Ethereum does look pretty dang bullish on the daily time frame. Money flow looks both good on NAMI and Market Cipher B. Let's zoom into the 8-hour chart. 8-hour chart, money flow looks bullish on NAMI and Market Cipher B. No bear divs on the chart. Let's go to the 4-hour chart. 4-hour chart, money flow looks bullish on Market Cipher B. It looks semi-bullish on NAMI, no bear divs. Okay, we're not really seeing anything yet, guys. I can see we're starting to see an exhaustion channel in here on low time frames. You have your quick move up followed by that buying exhaustion channel. So maybe the SFP is the level to be looking at. Let's go to the 2-hour chart. 2-hour chart, really bullish money flow, but we are starting to see multiple drives of bear div on NAMI and even money flow bear div on NAMI. All right, so now we know that lower time frames are suggesting we could get a pullback soon. You see bear divs on the 1 hour, you see bear divs, you had some bear divs and money flow bear divs. So yeah, I would really be looking for the SFP. Actually, what I'm going to do here, guys, is we're going to set an alert on the SFP of 2466. And if we get that SFP, I will short it. SFP short. If we get it. Now, if we don't get it, we don't take the short. And remember, the way to trade an SFP is you pierce above and then you start to close like a 5-minute candle below. So that's when you enter the short. Now, could we pierce all the way up to 2542 and then start to lose it? Yes. So in that case, you would short once you lose it. Your stop would go above that 1.236, and I would be targeting at, we would have to look at, I would probably target at least the bottom of this buying exhaustion channel, but we would look at pulling the fibs from lower, your wave 3 or your wave 4 targets. We would go from the lows here to your highs. We would look at our wave 4 targets. So you'd be looking at 2279 to 2200-ish. I like 2200 because it would take out all that liquidity from this buying exhaustion channel that's forming. It would also give you a nice risk to reward ratio. So we'll have to see how that plays out. But I set an alert on the SFP on Ethereum, and we'll look at it from there. All right, I want to check Bitcoin really quickly here. Okay, Bitcoin's pushing up, guys. That triangle, we're starting to see that triangle. And honestly, I really do think that Bitcoin is likely to make a new local high because we need that wave 4, even looking for a double top. All right, I'm giving away $500 US wallet. Okay, guys, don't listen to this haha guy. He's saying he's giving away $500 in a safe wallet. He's saying just deposit some TRX to move the funds. That is guaranteed, 99% guaranteed a scam. I'm going to remove that comment. If anyone offers you free money and says just deposit something in order to get the free money, don't listen to that, guys. Do not be dumb. POTUS gave an epic speech yesterday, full promo on Hyperliquid, 24-hour trading. Yeah, first of all, Baby Genius, I am super bullish on Hyperliquid technically. It is one of the coins that I've been looking to accumulate on spot. Could we see a correction only with BTC and the alts run? Thia guy, I think we could. Yes, we could. Or you want to see Bitcoin, maybe not too big of a correction though, right? You want to see a Bitcoin dominance. So Bitcoin dominance is starting to drop a little bit, but Bitcoin dominance is running pretty aggressively right now. So if Bitcoin dominance sees a drop down to backtest the value area high in the channel, we could see Bitcoin dominance continue to run up here. When altcoins really pump is when Bitcoin's like kind of ranging or correcting sideways and down, and then that's when the altcoins run. So let's just put this into perspective then. We're looking for a wave 4 pullback on Bitcoin. Remember, wave 4s are generally slow, grindy, corrective moves. So if Bitcoin is in a wave 4 pullback, that is when altcoins could run, because we know that overall Bitcoin is still remaining bullish. That is when altcoins could really run while Bitcoin's in the wave 4 pullback. So yes, I do think we could. Now, really quickly, guys, I want to go through our total market cap chart. And before I do, give me 1 second, guys. I've got to respond to a text message, and I'm also going to grab some water real quick. I forgot to grab my water bottle before starting the stream. So give me 30 seconds here. I will be right back. Okay, guys, sorry about that. Now, first off, I want to say thank you to all of you because we officially got to 100 likes, and I really appreciate that, guys. Thank you so much. You know, we're growing on the channel. We have exciting times for the crypto market, and I want to be here to trade this with all you guys. I want us to, as a community, I want to build a community that our objective is to work together, not against each other, but work together to scrape money away from the market makers, because the market makers in some ways are considered like the house in the casino. And we want to work together to try to scrape money away from them and support each other. So I appreciate the support, you guys. Thank you. Man, Bitcoin, total market cap. Okay. Total market cap is breaking out of the value area high of our range of pretty much all of 2026, right? We had our little accumulation range in here as well. And sure enough, look at, we're breaking out of it. And it looks like if we close the daily candle above the value area high, especially this high above, I think it's highly likely that we do come take the range highs, but we have to be careful here because we could see small pullbacks from the initial taps. We could start to see that buying exhaustion channel come in here over the next couple of weeks. And then we would be looking at like a 1, 2, 3, maybe we get a small pullback first to back test that value area high, and then we get that 5 up there. But it looks like pretty bullish for the total market cap. And if we look at that high that is coming in at 2.72 trillion, I really do think that we could see the pullback and then the move up to kind of back test that area inside the pitchfork band. And then that's when we could see a bigger correction down. No real bear divs. Money flow looks really strong right now on total market cap. And today's daily candle, and specifically the weekly candle, guys, because this is high time frame. This is like our weekly range, and this was our daily range. So we're seeing expansion from a daily range accumulation. But as far as our weekly range, we want to close a weekly candle above the value area high. If you close a weekly candle above the value area high, it's very likely you take out the range highs. First step is to close a daily candle, and it looks like we're going to do that today. So what we could also look at is pulling our Fibonacci golden pocket, 786. We're obviously above the golden pocket. We're, let me see, is this? Okay, that's only a 27% drop, so I'm going to keep it not on log scale. We're even breaking above the 786, and let's see if we hit the 886, because remember, in sideways ranges, guys, 886s often give you rejections. This is a very clear sideways range that we're in on the weekly time frame. So we have to be aware we could see a pullback from this 886 to backtest the value area high before coming up. And that would also be a wave 4. 1, 2, 3, 4, 5, right? We officially haven't actually hit the 886 yet, so I would expect us to continue grinding up, just like with Bitcoin. We're in bullish market structure. You can see we're starting to form some sort of exhaustion channel. It's a very steep exhaustion channel, but we're starting to form something here. I would look to come up a little bit higher to hit that 886. And what I will do here, I'm going to set an alert on this 886, because if total market cap is hitting the 886 and Bitcoin is also like making a double top of today's highs, we might be able to take some sort of short from that for a wave 4. Okay, let's look. I can check out AVAX real quick. AVAX. Breaking out of an accumulation range, very clear accumulation range down here. And our main resistance is going to be up near this purple box, but we have to be very careful. And look at, we bounced from a pitchfork midline. Let's see here. If we pull our trend-based Fibonacci extinction from the lows to the highs to the higher low, we're coming into our zone between the 1-to-1 and the 1.236. Now, what I would say about this is there's nothing really in here that is going to stop us. Really, actually, nothing really even in all of here that is going to stop us from coming up pretty aggressively. If we zoom out even further, I think it was, this is looking really, really good on NAMI. Low, lower, low, lower, low. Triple drive of bull divs. Now, I'm on Binance chart. Let me go to my Coinbase chart for this. Yeah, and I will have to get rid of some of this lower time frame analysis. we were looking at some levels in here. So we have our golden pocket coming in at 829 to 846, and we have our 786 coming in around 920. Those are both key levels. We'll get rid of all of this. We saw the SFP here. That was good. Golden pocket was hit here. We saw a nice bounce from golden pocket. We never came down to our 786 where our liquidity was. Breaking above this. So essentially we're breaking out of this smaller range. You can see this smaller range in here that we had. Breaking out of the value area high with massive volume. Even back testing the value of the point of control before a nice breakout. So I say when we break out of these accumulation ranges, we have an accumulation range here. We look at two levels. We look at the value area, or we look at the actual lows of your previous range. This is our previous range. Or we look at the value area low of that previous range, right? If you can get above your previous range lows, you're likely to come up towards the value area low. So what I will say here is if we pull a golden pocket from the highs to the lows, golden pocket, we want to put that based off log scale because that is more than a 30% drop. You will see that we already have the golden pocket on the chart, 846 to 829. Okay, that is going to be a really, really important golden pocket. It is also going to be where your macro range value area low is. So if we're looking at all of this price action that goes back to 2022, this larger weekly or monthly sideways range, the value area low, the bearish backtest of the value area low, you can see right here is at 839. And what I will do is I will pull this volume profile. Oop. To current price action. So our next major resistance on AVAX is going to be around 830 to 846. And you can see I have a smaller purple box within the larger purple box. So the larger purple boxes are a big, I get that's a very big zone for resistance. We just have so much in here. We have our 3-year long range point of control. We have our smaller prior range point of control. The value area lows in there. Your 786 is in there. Naked weekly point of control. Naked daily point of control. You have a naked daily point of control around your value area low. There's so much in here. That's why this whole box is a resistance zone for a major rejection. If we reject from this zone at all, you might see new lows. But within that zone, the bigger confluence is between 846 and like 830-ish, right? And I would say it's likely we come up to this 846 to 830. Now, if we're going to pull our trend-based Fibonacci extinction targets, I guess, wow, okay, even, see, this is why we got to have this big box in here. It's really, really quite difficult. Actually, what I want to do is I'm going to delete the big box or hide it. We have a few different levels to look at. So clearly we have our golden pocket at the macro range value area low, our 3-year long range. That is our first box of resistance. Our second box of resistance, which is going to be really close, is going to be our naked daily point of control in confluence with our previous range value area low, and we have our 1.618, which would end a third wave, right? If we're looking at an impulse, 1, 2, 3, you could get a pullback and a 4 to backtest the primary value area low, and then you could get your 5th wave. So our next box of resistance would be this box up in here between 921.7 and 915. And I get that those 3 resistances are really close to each other, but those are your 3 main resistances. So instead of using a big box, we'll kind of make it a little bit more tactical here, if that's the right word even to use. But you guys get the point. Now, if we're going to be in a macro bearish scenario, we would expect to reject between the 1-to-1 and the 1.236. And we're in that zone right now. We do have money flow looks relatively bullish on the daily time frame. You know, just crossing up into the green on Market Cipher and pretty nicely into the green on NAMI. If we go to our Okay, Ethereum is SFPing, guys. Hold on, we gotta see this. Ethereum is SFPing the highs. Let's see if we get the SFP. All right, we're piercing above. I am not going to try to short this until we close the candle body below, because look at, we could see a breakout right now, and it looks like that's what we're trying to do. No, okay, we're hitting the range highs right now, and it looks like we want to see a true breakout of the range. Remember, we could come all the way up to 25.42, guys. We could see a move all the way up to 25.42. Money flow looks super bullish. Now, if we start to lose those highs, and I would like, for me personally, I'm going to be looking for a 15-minute candle close below 24.66. No 15-minute candle close below means no short. Ethereum could really be about to explode up to 2,800. And remember, if we break above 28.542, there is really nothing in this zone that is going to keep us coming up. We would probably see a quick move up. Because if we look here, there is nothing in here that is really going to keep us from shooting up very, very quickly. I have to check something here because I think I had a partial TP on a long on 24.66. Okay, good. She ain't stopping. Yep, she ain't stopping. BTC breaking 78 also. All right, let's see here. BTC. Now, remember, on BTC, we're looking for that move up to the local golden pocket area, around 78,350-ish. To me personally, because we're not really losing the VWAP is still holding as support. I think that this local short might not play out on Bitcoin. And altcoins look like they're about to run, guys. Let's see if we get the rejection from the 886 on the total market cap. Total 3, look at total 3 is actually flipping resistance into support. Wow. You're flipping your 786 and your point of control into support. It was also the value area high of your previous range right at that 786. Man, this is going to continue. And this is starting to look more and more, guys. Hold on, let me just put the 786 on. This is starting to look more and more like an impulse. Wave 1, wave 2, wave 3, and I would expect this wave 3 to continue. That means altcoins are going to continue to break out here. Actually, hold on, I got to redo that. You see this initial move up? 1, 2, 3, 4, 5. So this is actually the high. So we need to go from the lows of wave 1 to the highs of wave 1 to the lows of wave 2. And actually, we are hitting the 1.618. We're even breaking above the 1.618, which it doesn't have to end there. We can go higher. I want to turn on our 2 Fibonacci level, and I want to turn on our 2.618 Fibonacci level. Now, I really like the 2 Fibonacci level because look at where it would be. An SFP of the range highs right into the 2 Fibonacci level. That is where we could end our third wave. 1, 2, 3, get a pullback to POC in a wave 4, and then you would get a move up in a wave 5. That is your total market cap. And this POC is of a much larger range, guys. That POC is of a range that goes back to March of 2024. And if we close our weekly candle this week above the POC of this range, altcoins could really explode. And look at where altcoins could go to. Value area high in back test of the pitchfork, of a bearish pitchfork we broke down from. So this could be a larger 1, 2, 3, 4, 5. You could get a 5-wave move up, followed by a corrective move, and then another 1, 2, 3, 4, 5, something like that to come up near the value area high. Man, we could really see altcoins explode. Yeah, it does feel like 2021, right, Travi? Oh my gosh. Let's see. ZEC. I think I like ZEC. Could we short this double top? Yeah, I do think we could short a double top. You're coming back into a pitchfork. Let me get rid of a lot of this local TA. We're trading ZEC for a while. By the way, we were looking for the long right on that golden pocket at 444. If you look here, we longed this green box right here into a naked weekly point of control, and it was a golden pocket. We looked for the higher low golden pocket right here at 444. And now we're pushing up. So from that golden pocket, it was a higher low at 444. We can get rid of this channel. And remember, that channel was a three-wave. We were looking at this being a three-wave corrective move. And now we're in an impulse. So could you short the double top? I don't know, because look at, we could be seeing a 1, 2. Now, sure, you could short the double top to end your wave 3, but then you would probably see a pullback in a wave 4 and then a wave 5. So it looks like ZEC is going to continue breaking up to new highs. This doesn't matter. But yeah, man, I want to check to see if these are fresh levels. So let's go on to the weekly. That is a fresh weekly level that's up there that we're breaking above at 699. We don't have any daily levels. Honestly, there's nothing left to keep us from coming up to take out the highs at 744. There is nothing left here, guys. We clearly broke through this resistance, this local resistance, no resistance at all. Bitcoin is hitting our local golden pocket. All right, what we want to see here, do we see bear divs? Now, what we want to see, if we want to short this golden pocket 786 zone, you would want to see bear divs on this move up, on this little move up right here. Do we see bear divs? No. Do we see bear divs? No. Okay, let's go to the 5-minute chart. Do we see bear divs? No. Do we see bear divs? No. Money flow crossing into the green, money flow crossing into the green. So right now, I do not see the confirmation I want in order to take a short from this golden pocket. Could it still play out with another move down to take out your local low? Yes, but I do not see confirmation. And if we're looking at the move down, 1, 2, 3, you actually have overlap, or do you have overlap? Yeah, you do have overlap between the highs and lows. So you could call that some sort of contracting diagonal maybe, but you would have to look at this as a larger corrective move. Now because this move down has overlap in the 5 waves, you would have to look at it as some sort of different, complex correction, which is probably continuing 3-wave, 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 WXY correction, and you're likely to take out the highs. So even just knowing that, I don't want to short 786 golden pocket right now. Yes, you might get the move, but I am not willing to take it. Travi trades, way to go, man. See, guys, you can even long the tops of major moves as long as you're using proper risk management. Because Travi trades just longed, you could have longed the back test of the VWAP. Let's look at that. So you had your VWAP tap here. What I don't like is this was a 3-wave corrective move. So you could have made another 3-wave corrective move to take out that low. It's dangerous to long towards the top, guys, but as long as you're using proper risk management, you can look for scalp longs. As long as you're taking a 1 to 3 risk to reward ratio. So say maybe you long this higher low right here, stop goes below this low, and you're targeting taking out the highs. That's a really nice scalp trade there. Even coming up to the golden pocket and taking out that liquidity, super nice scalp trade. That would have been too risky for me personally. But yeah, here we go, boys and girls. Here we go. Let's go. This thing is just going to continue to pump. Is Ethereum? Ethereum is not seeing an SFP. Honestly, guys, Ethereum could start to skyrocket right now. Like, this could be really fun for Ethereum. 2542 is the next major level on Ethereum. Also, Solana is breaking above its major resistance. So Solana had a value area high of its major range, from February. You have this range from February, and we're back inside the volume profile. You can see we're back inside that volume profile. And we're breaking the value area high, which was also a 786 Fibonacci. It was a naked weekly point of control, and it was our pitchfork band. So to me, and I said this yesterday in yesterday's video, I do think that Solana has a higher likelihood of taking out our highs at 98.4. Looking at a larger kind of corrective move in here to take out those range highs, and then potentially seeing a move down. In the bullish scenario on Solana, we're looking to come up to the 120 to 127. 1, 2, 3, 4, 5, something like that. We're looking for a major move up. I wouldn't get too excited on major pumps right now, guys, because we're going into the weekend. But remember, when we have these crazy parabolic pumps like this, I said it this morning in the Telegram, I am not actively looking for shorts until I see a range and a sign of weakness. So even though today on Bitcoin, I woke up to us exactly hitting the 1.618 trend-based Fibonacci extinction, and I woke up to us exactly hitting that 1.618 1.618 in anchored VWAP, I still told you guys I am still not looking for a short yet. I want to see a sign of weakness. I want to see some sort of range form. And over the weekend, we could form a range in here, guys. And then we could, but knowing our local move, 1, 2, 3, 4, 5, we need a little pullback followed by one more high. Maybe right now that pullback we got earlier today, it's very short. Actually, I wouldn't even say that's a pullback. On like the 4-hour chart, it doesn't even look like a pullback. We need something that's like a couple days long. Or 5 days long, I think that was. Now, one thing I will be looking for is an SFP of today's highs. Because if we SFP today's highs, we might get that finally overall zone of a third wave ending. And then we might get a bigger pullback. It does look like we're starting to see a reaction from that local golden pocket. Grabbing liquidity. Seeing a reaction. But let's see. I mean, I think this is likely to continue up. Could we get a small pullback to take out those local lows? Yes. And see an overall sideways range in here before continuing. So let's look at a short. I personally am not going to take this. I'm letting you guys know that right now. I'm not going to try to short this. But if you want to try to short, you could put your stop. Once you start to lose and close like a 15-minute candle or a 5-minute candle below the golden pocket, your stop would go above the most recent high, and you would be just targeting the lows. That's still a 6.7 scalp short trade. That's a very nice scalp short risk to reward ratio. ETH still not gonna, yeah. I think ETH's coming up to 2542-ish. But if we close the daily candle below 2466, I will enter the short. So in that case, let's go to the daily candle. If I see the daily candle close below 2446, I will look for a short around wherever. I would look for some sort of retrace and a short. Your stop would go above that high, and then I would be targeting that 382 zone. That's still a 5-to-1 risk to reward ratio. And actually, the 382 is going to change now because, actually, the 382 would be at 2250 to 2174. But I honestly doubt, guys, that we're going to close below the range highs. This is just nuts what's happening here. I mean, it's looking pretty sweet for the bulls. I mean, this is just interesting to see what's happening here. Just don't get too bullish, guys. If you're not in longs, don't let the FOMO make you have bad decisions, okay? Please do not let the FOMO. We are at the top of 3 days of massive pumpage, okay? You cannot, if you're using proper risk management, you cannot start to FOMO and long at these highs here. You have to be cautious and wait. Even shorting at these highs is dangerous because you want to wait for a sign of weakness or some sort of range to form. Can Bitcoin go to 70K? Yes, it can. Well, 71K is more appropriate. But yeah, if we're going to see a wave 4 correction, 1, 2, we hit the 1.618 for your 3. If we see 73 is more likely, in my opinion. I think 73 is super strong support. Let me explain why. If you look at your range from February to current day, 73K would be a pullback in a wave 4. It would be the back test of the breakout of your value area high. It would be your 382, and then you would be looking for a wave 5, which is either going to end at this purple box, it's either going to end at an SFP of the range highs, or we're coming up to 89. But we need to see a pullback first because this wave 3 doesn't have to end at the 1.618. It doesn't have to end at the 1.618 where we hit today. It could keep going all the way up. Let's put on some more targets. Our 2 Fibonacci and our 2.618 Fibonacci. I highly doubt we're going to go up to the 2.618, but the 2 Fibonacci, our wave 3 could end 1, 2. Our wave 3 could end with an SFP of the highs into 83.6. Then our wave 4 could pull us back to either backtest the anchored VWAP, or it could pull us back to backtest the pitchfork midline. You know, so the wave 3 doesn't have to end right now, but it's a prime target for it to end right now. Wow, we are getting that nice reaction, huh? Not so nice yet, but you are starting to get a little bit of a reaction from our very, very local golden pocket. I'm not shorting this. I have sell holdings at 73. It will give me a chance to close. Yeah, I mean, so it depends on how high we go before our retracement, but 73K, I think now 73K is turning into a strong support level. Can Sol hit a 95 to 100 today? Now, today, 95 to 100? Yeah, we could. Solana could continue pushing up to 98 today. Yeah, I would say it could. Now, is it likely? Because let's go to the daily candle on Solana. That's already a pretty massive daily candle. Yes, it could continue because we're breaking out of the value area high. So if you close today's daily candle above the value area high, then you have to look at taking out the range highs. And you're also breaking your naked weekly. You're also breaking your 786. But the one thing I would really watch for is your 886 Fibonacci. $94. Watch out for that 886. Those guys are very sneaky. Yeah. Yeah, we did look at XRP, Joe. XRP is looking actually really, really bullish. Like, honestly, XRP is hitting into a point of control. And we also have a naked weekly point of control that actually hasn't been tapped yet. It's just above. If you look here, the naked, oh, that's monthly. The naked weekly is still fresh. It has not been tapped. So we could get a double top around 143.3. But XRP is breaking out of a bearish pitchfork. a macro bearish pitchfork in here. And I really do think that XRP could push up very aggressively, at least to 155 to take out this liquidity into your value area high. But we might continue on XRP in the coming months to see an impulse up to, you know, the 220s, 230s. Good idea, Peoria Beat. Let's check CVD and open interest. Okay, this is a little bit concerning, guys. A little bit concerning. So right now, CVD is market longs and market shorts. So from our highs, our CVD is right here. We are making higher highs just barely. But if you're making lower highs in your price action and higher highs in your CVD, that's a bearish CVD divergence. And in a bearish CVD divergence, you would expect to reject from golden pocket 786. And then you would, and the target for that bearish divergence is to take out your local lows. So we could get that larger sideways corrective move. And we're going into the weekend, so it makes sense as far as the weekend goes as well. Now, it's on a decrease in open interest. It's on a steady decrease in open interest. So it's not bearish absorption. There's a major difference. If it was bearish absorption, I'm seeing right now, I would be taking the short. It is not bearish absorption. It's bearish CVD divergences on a decrease of open interest. Not the same thing at all. And yeah, let's look at going back to Bitcoin. I want to start to look at our volume, because if volume is starting to decrease now, that is when we can start to look for some exhaustion. Yeah, you can see now from the highs from earlier today, volume is now kind of decreasing as we're moving up. So if we take out the high from earlier today again and volume continues to decrease, we might get a short SFP from 79.5. The reason why I'm hesitant right now, even though we're seeing kind of the bearish CVDs, is because the VWAP is still holding. And remember, the VWAP is your intraday volume-based trend support. We've come down to the VWAP twice and bounced from the VWAP twice, meaning the bulls are still in control. The trend for the day, which is clearly up, is still in control. And the 786 actually looks a little bit better anyways, because you have that anchored VWAP from the all-time high there. So if we come up to 79,800 or 78,800 and we continue to see bearish divergences on the chart, which right now our CVD is going down, we're seeing a bit of a short squeeze. Actually, no, fresh shorts are coming in right now at the lower high golden pocket. Look at this, guys. The past 20 minutes or so, actually, 15 minutes, shorts are coming in, and they are fresh short positions. So we are seeing some fresh shorts from this golden pocket, this low time frame golden pocket right now. Now, that's going to mean one of two things. We're either going to get those shorts that get stopped out, and it's going to be used for fuel to continue to push us higher, or those shorts are actually going to win, and we're going to see that bearish CVD play out to take out our local low. So it's a fight right now, a fight at this golden pocket. I would like to see the bulls kick in and squeeze out those shorts and take out the highs, but it's not guaranteed. And the reason why people are shorting this lower high golden pocket, because clearly you're not going to look to short this. I mean, you could as soon as you hit this 1.618 and stuff and lost it. But if you were not trying to catch a rocket, like let's go to the 2-hour chart. You see 4-hour chart. You can see our 1.618 was at 79,041. So the second you pierced above it and started to lose it, you could have put on a short at the 1.618 with your stop above the high at 79.5, targeting, you know, what, even value area high or even the back test of the pitchfork band. which you would have made that trade. That was a 3-to-1 scalp. You would have won. But if you didn't catch that short trade, the next best opportunity is to short the lower high golden pocket 786 zone, which we're at right now. So that's why, because we're hitting macro resistance, we're starting to see shorts coming in here because they said, okay, I missed the main short opportunity. Here it is here. And I explained the same thing to you guys at the lows with Bitcoin down here when we SFP'd the naked monthly point of control into an anchored VWAP. We had that initial break in market structure, and then I longed the lower high golden pocket around 58.2, 58.3. So it's similar. All right. Hold on, guys. I got to answer this question real quick. Okay. I'm gonna finish the live stream in 10 minutes, guys. I've been live streaming since for 3 hours, almost 3 hours now. So remember, if you do want to get updates over the weekend, all you have to do is join BYDFI. I have a Telegram channel. It's free to get into, and I try to keep you guys updated throughout the weekend on Bitcoin and also on altcoins. I have a feeling this weekend could be an exciting weekend, and any trade setups that I'm looking at or trades that I take on the altcoins on Bitcoin, I post it in the Telegram for you guys, and I try to let you guys know ahead of time. So if you want to take that trade, of course, not financial advice. I'm not a financial advisor. But in order to join the Telegram, all you have to do is join BYDFI using my affiliate link in the description and deposit a minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger bonuses here. But once you've deposited the minimum amount, you click the Telegram link, and in the Telegram Verify channel, type in /verify and then your user ID, and that'll get you into the Telegram channel. Yeah, Bitcoin is not seeing a clear rejection here, guys. And look at, we're about to squeeze out those shorts. We are about to squeeze out those shorts that just entered. Still, shorts are coming in. New shorts. The last 10 minutes, we've had some new shorts coming in right at our golden pocket. So it is a battle right now. It is a battle between the bears and the bulls. Are the bulls going to continue to win as they have the past 3 days? My short liquidation for Bitcoin is at 85K and entry is at 73K. Am I safe? Okay. Blink Binge TV. I'm going to be a little bit harsh on you right now, but I'm doing this because this could be a painful lesson that you're experiencing right now. And I want you, this is not to be mean to you in any way. This is to teach you, like, if you want to be a proper long-term trader, you have to have proper risk management, and you have to learn how to have a trading plan ahead of time and have an invalidation for that plan. So you shorted 73K, which was the value area high of the range. Now, I don't know what your plan was. Maybe you think we were going to reject from 73K. That was also our golden pocket. Remember, that was also our golden pocket. If you were going to, let's say your plan was to short the 73K golden pocket. And once you lost, or to short 73K, right? It's the value area high. It's the golden pocket. You were going to short 73K. Now, your plan was probably to bring it down towards the POC, or at least towards the value area high of this small range. Your stop loss should be above the golden pocket or above some local resistance above. We had a daily order block right here. So maybe you put your stop loss above that liquidation, above that daily order block and that internal liquidity. So that right there, and we would pull the value area high of this range. Coming down here, testing your pitchfork, your value area high, that gives you a 5.75 risk to reward ratio. So that's a good trade to take as far as risk management goes. But as soon as you invalidate it by taking out that high, you should have got out of the trade. Now, if you're saying 85K is your liquidation, 85K is your liquidation, and even if you were planning to come down and take out the lows, that's still only a 1-to-1 risk to reward ratio. So like that is not the best trade to take, right? You want to have your risk to reward management. As long as you're taking a 1-to-3 risk to reward ratio trade, you can actually lose 70% of your trades and you can win 30% of your trades and you can still be profitable. But you have to plan your trading setups so that if your setup is wrong, you get out. So if you were planning to short this golden pocket value area high, the second you found out that plan was wrong because we started breaking above 74,000, you should have got out of that trade. You should have closed it down. You should have taken the loss. But now, unfortunately, now you're in massive drawdown, right? You're messed up. Your trade plan's messed up. Could we see it go to 73K first before 85K? Yes, we could. We have resistance that we're at right now, the 1.618 in the anchored VWAP. We have resistance at 82 to 81. We have the SFP into your 2-to-1 fib extinction. That's another zone of resistance, okay? And it's likely that we see a pullback before in a wave 4. Because remember, we're looking at this, a 1, 2, 3, 4, 5, right? In the fourth wave, by the way, 73K is now massive support. So at best, you might be able to get out of this at break even. I wouldn't expect you to drop down much lower than 73K. And it's a tough lesson to learn. What I'm trying to say to all of you is have a trading plan where you have a clear invalidation to get out of that trade. A clear invalidation to get out of that trade. If you do not have a clear invalidation to get out of that trade, you shouldn't be taking the trade. Now, unfortunately, you're stuck in the situation you're in now, and I can't give you a for sure answer. Of course, I'm not a financial advisor. I don't give financial advice, but looking at the structure and looking at how we're hitting an anchored VWAP in a 1.618 and how we have 2 resistances before 85K, it is likely that we could see a pullback before coming to 85K. But the question is the pullback going to come all the way down to 73? We're above our pitchfork midline, and if this keeps running up to 82, we might only see a drop back down to 77, 76 before coming up to 85K. So it's a very hard question to answer. We are at a major wave 3 target. We are going into the weekend. It is the time where we would expect a low grindy pullback before continuation in an impulse. But what I will say for you is that it is likely we do make new highs. 1, 2, 3. Are we going to pull back all the way to 73 for a 4 and then get the 5? It's possible. We're not seeing the best indications as far as money flow and momentum. But on the 2 hour and under, we are seeing bear divs confirmed. Oh, wow. Look at that money flow curving up now. Geez, dude. Bear divs are still confirmed, but money flow looks strong. It is not guaranteed that we go down to 73 first. Unfortunately, not guaranteed. And our value area high is shifted up to 73, 350-ish. 73.3, let's say. We're coming up to that local 786, you guys. So, Blink Binge TV, what I would recommend is the net, even if you do get out of this with a slight loss and everything, you really want to work on your risk management and setting up that plan of a clear invalidation before. So for instance, if I was going to short the 786 tap right now, I would be shorting the 786. My stop would go above the local high, because if we start to break that high, obviously my trading plan was wrong. And I would be targeting this local low. That's a 3-to-1 risk to reward ratio scalp. So it matches my 3-to-1 risk to reward ratios, you know, which I like to take at least a 1 to 3. And I have a clear invalidation, because if it keeps pumping, we're likely to continue to higher targets. So I would get out, and maybe it's just going to SFP and then drop back down, and I get stopped out, and then it does what I wanted it to. Well, I would just look to re-enter on an SFP up here. I'd get stopped out of my original trade. I would look to re-enter on an SFP. I promise you guys, risk management is the most important thing in trading. ETH broke the anchored VWAP from the all-time high. Did it really? No, my anchored VWAP from the all-time high is much higher. I use the Coinbase chart, so I don't know what chart you're looking at, but my anchored VWAP from the all-time high is coming in at 2775-ish. Is it on Bybit? On Bybit, it's also at 2775-ish. So I'm not sure which exchange you're using, but the anchored VWAP from the all-time high is higher on Bybit and Coinbase. And those are the two charts I like the most anyways. Look at, we took a little short from this purple box. Had to move down, and then now we're breaking the value area high of the range though. That's what's important. Breaking the value area high, breaking above the range highs. So yeah, and there's not a lot, guys. There really is not a lot keeping you from coming up. I think ETH is about to fly. I think ETH is about to fly up. We're already coming up to 2542. Gosh, it's going to hit it during this stream. I do have to get going soon. Guys, I have to answer this text message real quick. Let's just watch the charts. It's probably going to hit this in the next 10 minutes. Let me get this text. Okay, sorry guys, I needed to answer that. I do need to get going soon for real. Man. Well, Archie TV, much love to you, man. It's so good to see you in here. And thank you so much for the comment. I've been streaming for over 3 hours now, guys. I know the market is flying. Let's see, is Solana flying too? Yep. Watch for the 886 tap on Solana. 886s in sideways ranges are very, very powerful. And we have that 886 coming up. Now, if we tap the 886 on Solana, we might only get a pullback to backtest the value area high before coming up to 98.3. In my opinion, it's likely we take out 98.4-ish, right? But we might get a pullback over the weekend from the 886 at 94. If we break above this and close the daily candle above 94, man, we're going here, and we're probably going here in the long term. That long term, 127 to 121. Guys, that's your pitchfork midline, your naked monthly point of control, your 1.618, your value area low of your previous range. We could really see alts explode right now. Let's go to the USDT dominance chart. We could really, really see alts explode. We are dropping, and sure, we SFP'd the range lows today, and it depends on how we close this daily candle. If we close it above, we could see a retracement to backtest the POC before coming down to the larger support level, and we would be seeing like a 1, 2, 3, 4, 5. But this could keep dropping in a 3, 1, 2. The 3 could come down here, then we could see a 4, and then we could see a 5. Something like that, man. It's incredible what we're seeing. And remember, the value area high of our macro range has now shifted up to where that 0.5 is. That's your massive range value area high. You could be coming down here. So if we're going to come straight down here right away, 1, 2, all the way down to backtest this in a 3, and then maybe see a double bottom at that weekly, a 5-wave move down. I mean, we could see alts run, and going back to total market cap here as well. Guys, do not try to get into shorts when you're trying to see rockets explode. Total 3 market cap is likely to come to the 2-to-1 Fibonacci extinction, which is also an SFP of the range highs. We have the total market cap. It is hitting the 886. We are starting to get a rejection from the 886, or at least a reaction from the 886. Now, this might be the same as Solana, where we get a pullback to backtest and then we come take out the highs, right? And it would be an SFP of the highs into the pitchfork band, and then we get a bigger move down. Volume still increasing. Look at today's daily candle. More volume than yesterday's, more volume than the day before. This is still a super strong, healthy move to the upside. I would be very cautious trying to get into shorts right now, guys, until you start to see some sort of consolidation, sign of weakness, volume going lower as we're going higher. I would be very concerned. People don't understand in the crypto market, when we start to see, just like with dumps, they can get a lot more aggressive than you thought. The pumps can as well, especially on altcoins with lower market caps. Bitcoin is in a fight. We're in that zone right now. We rejected from the 1.618 and the anchored VWAP from the all-time high. We're in the zone where if we're going to get a small 3-wave pullback, this would be the zone to do it. We'll see. I'm not taking that short either way. I'm going to be patient. But guys, I do got to get going. Please do hit the like button if you did get any sort of insight into the market from this live stream. Remember, I'm going to keep you guys updated the best I can over the weekend on the Telegram. So to join the Telegram, you just have to deposit a minimum amount of $100 into BYDFI. That money is your money. You're not paying it to me. You're not paying it to BYDFI. And then click the Telegram, and in the Telegram channel, type in /verify in your user ID, and that'll get you into the Telegram. Otherwise, I will see you guys on Monday. I'm going to make a video around market close on Monday. I stream Tuesdays, Thursdays, and Fridays at 3 p.m. Eastern Standard Time. But we have some very exciting times coming in the crypto market. We have some very good swing opportunities coming in the crypto market, and I will do my absolute best to get you guys involved with that, to do my best technical analysis to make sure we are all properly making money from everything. Of course, not a financial advisor. I don't give financial advice. And I just want to keep you guys updated the best I can. So thank you all so much for the support. Appreciate it. I think we've had some good live streams. We'll continue to build. We'll continue to build a community. And I will see you guys Monday, unless you're in the Telegram.